Committee will come to order without objection. The chair is authorized to declare a recess of the committee at any time. All members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. This hearing is for the purpose of receiving the Secretary of Treasury's annual report on the Financial Stability Oversight Council. Now recognize myself for 3.5 minutes to give an opening statement. Mr. Secretary, this is your first appearance before the House after the Tax Cuts and Jobs Act has been signed into law. I want to let you know on behalf of the majority how grateful we are to you and to the President for your leadership and for helping make this act signed into law. It is truly, truly historic. After 8 years of failed economic policies that led to the slowest, weakest recovery in the modern era, the economy is starting to take off and wages are finally growing again. Consumer optimism abounds. So how ironic but totally predictable that equity markets would now swoon over the prospects of higher interest rates and possible inflation associated with a breakout of economic growth. Artificially low interest rates may have benefited some on Wall Street, but they haven't been particularly helpful to Main Street. We have always known that the Fed would face significant challenges in unwinding its balance sheet when the economy took off. If you're listening, good luck, Chairman Powell. You volunteered for the job. But today, the underlying economy is strong and getting stronger due to the policies of the Trump administration. We're averaging 3% growth again. Unemployment remains at a 17-year low. Wages just grew at 2.9%, the fastest in almost a decade. 2 million Americans have gone back to work. All of this in President Trump's first year in office, and we are just now on the leading edge of the Tax Cuts and Jobs Act. Let's take a look at the impact on the financial services industry alone. J.P. Morgan Chase recently announced it would be making a $20 billion 5-year investment across its business lines. In addition to increasing wages for their employees, they plan to boost small business lending by nearly 20%. In my hometown of Dallas, Comerica announced it is boosting its minimum wage to $15 and giving a $1,000 bonus to 4,500 employees. Nationwide is giving its employees a $1,000 bonus and increasing its 401k match. Visa is also increasing its 401k eligibility and contributions as well. BB&T is raising its minimum wage from $12 to $15 an hour and giving its employees a one-time bonus of $1,200. Hardly crumbs. And these are just a few of the financial services companies that have announced benefits due to the Tax Cuts and Jobs Act. Again, Mr. Secretary, thank you, and thank you to the President. Unfortunately, tax reform alone will not unleash our nation's full economic potential. Why? Because for the last 8 years, our economy has been drowning in a sea of complex, onerous, expensive, and job-crushing Washington red tape. Fortunately, the Trump administration has aggressively cut needless red tape like few others, but much work remains, including at the Financial Stability Oversight Council. FSOC can clearly serve a vital function in promoting financial stability by monitoring market developments, facilitating information sharing across regulatory silos, and making policy recommendations to Congress to mitigate risk. Unfortunately, FSOC has proven it can also harm our economy through its designation of SIFIs. Under the last administration, FSOC simply eviscerated GE Capital, one of America's great companies, one that had capitalized millions of small and mid-sized companies from local bakeries to furniture stores. It's just gone. In a dangerous, unlawful, and misguided effort, it attempted to designate MetLife a SIFI, an insurance company. Fortunately, the decision was found to be arbitrary and capricious and overturned. Mr. Secretary, I'm encouraged by much of what I read in FSOC's annual report. Under the new leadership of a new administration, I look forward to hearing more about it. I now recognize the ranking member for 4 minutes for an opening statement.
Thank you, Mr. Chairman, and welcome back, Secretary Mnuchin. I'm looking forward to your testimony today on the annual report of the Financial Stability Oversight Council, or FSOC. I'm very concerned that the Trump administration seems to be determined to remove all non-bank systemically important financial institutions from FSOC supervision, regardless of what threats those institutions may pose to our economy. As we all know, one such financial institution, AIG, nearly brought down the economy in 2008 and had to be bailed out to the tune of $182 billion. FSOC plays a key role in ensuring the continuing stability of the United States economy, and it must not be weakened or sidelined from dealing with threats posed by risky financial institutions. In addition to testimony on FSOC, it is also important today that the Secretary address several outstanding inquiries on vital matters with national security implications. Mr. Chairman, as a general matter, Secretary Mnuchin's handling of inquiries from committee Democrats has been completely unacceptable. As you know, serious questions have been raised about the finances of President Trump, his family members, and his associates, and their involvement with Russian government officials and oligarchs. As a ranking member of the committee with jurisdiction over the Treasury Department's Financial Crimes Enforcement Network, that is FinCEN, I and other Democrats on the committee have requested information from the Secretary on these matters several times. As the Secretary's last appearance before this committee, I asked about a letter that we had written to him regarding President Trump's financial ties to Russia, as well as those of his family members and associates. Secretary Mnuchin did not answer the letter, and he was not forthcoming in his testimony. Since then, we have sent the Secretary 2 additional follow-up letters pertaining to the finances of President Trump, his family members, and his associates, as well as his own handling of law enforcement and regulatory matters that may involve those individuals. The reply that my Democratic colleagues and I received from Secretary Mnuchin's staff just a few days ago did not provide answers to our inquiries and instead encouraged us to go and get the information we requested from other committees with which the Treasury had provided documents. Despite the fact that the Financial Services Committee has clear jurisdiction over these matters, the Secretary seems to think that referring us to other committees is a satisfactory answer to our questions. It is not. Relatedly, I'm also very concerned about the Trump administration's inaction on the sanctions passed with broad bipartisan support by Congress in 2017 to punish Russia for interfering in our democracy. The Trump administration has now missed several deadlines related to those sanctions, which is unacceptable. Trump's inaction in this area serves to advance the interests of Putin, the Kremlin, and Russian oligarchs to the detriment of the American people. My January 31st letter to Secretary Mnuchin and Secretary Tillerson on this matter has gone unanswered as of yet. Since Secretary Mnuchin is here today, it is my sincere hope that he will provide answers to the questions we have on all of these matters. And so with that, Mr. Chairman, I will yield back the balance of my time.
Chair now recognizes the gentleman from Missouri, Mr. Lukemeyer, the chairman of the Financial Institutions Subcommittee, for 45 seconds.
Thank you, Mr. Chairman, and thank you, Mr. Secretary, for being here today. In the last year, we've made significant progress on tax and regulatory reform. However, we must continue to improve the efficiency of the regulatory regime that's left too many consumers and small businesses sitting on the credit sidelines. I'm a firm believer in meaningful regulation. At the same time, regulation needs to be responsible and tailored. With regards to risk, for too many years, we've dealt with a federal government that tried to purge all risk from the system. I remain unconvinced that the result of those actions has done very much at all to promote financial stability. With regards to FSOC, Mr. Secretary, I urge you to use your authority to re-regulate and promote financial stability through analytical, not arbitrary, processes. FSOC needs to become a more thoughtful body. We look forward to your testimony, Mr. Chairman. With that, I yield back.
Gentleman yields back. The chair now recognizes the gentleman from Michigan, Mr. Kildee, the vice-ranking member, for 1 minute.
Thank you, Chairman Henschling and Ranking Member Waters and Secretary Mnuchin. I appreciate you being here. We haven't met. My hometown is Flint, Michigan. And what happened in Flint's an example of what happens when we fail as a society to invest in older industrial cities, those towns that are struggling to make that transition to the next economy. The water crisis in Flint is a tragedy that is sadly still ongoing. It should be a wake-up call for every American, a wake-up call about what happens when we put balance sheets ahead of the interest of people. Yet this administration and your department as well recently have attempted to justify changes in our tax code that by implication will hurt many of these communities. The Republican-passed tax bill, while certainly there are winners and losers, and we could litigate that for the entirety of this hearing, one thing we know for sure is that the changes in the tax code are already being used by the administration and by this Congress to justify cuts to programs that are necessary to the revitalization of these already struggling places. That is not acceptable, and there's no way to justify that. What we need in this country is a plan to reinvest and reinvigorate those places. People live there, and the implications cannot be overlooked. We can't just focus on the people at the top who are winning without recognizing there are people who will suffer as a result.
Time of the gentleman has expired. The chair now recognizes the gentleman from Michigan, Mr. Huizinga, the chairman of the Capital Markets Subcommittee, for 45 seconds.
Mr. Secretary, up here. Last week, my fellow Michigander, Zach Booker, was my guest to the State of the Union address, and Zach's a fourth-generation barber, and as well as starting and owning a number of various small businesses across my district in West Michigan. Zach describes himself as a young but hungry for success and continues to strive for growth. And he has said because of this Tax Cuts and Jobs Act that he is actually, quote, saying, our goals can be extended. I'm increasing wages. I'm trying to hire more people. I'm trying to broaden our reach to serve more customers. We're trying to add more locations. We're trying to buy buildings instead of rent buildings. Zach's is a common story. This bill is not just about providing crumbs to the American people. It's helping young entrepreneurs like Zach grow our economy and achieve the American dream. So we as Congress know that we must work hard to do more to make sure that hardworking families in West Michigan and across the nation have the opportunity to save and invest and have a better future like my friend Zach. And Zach also knows, Mr. Secretary, that what's happening on Wall Street is a technical correction hitting Wall Street, not a fundamentals correction that's hitting Main Street. Far too long we've been ignoring Main Street, and it's time that we've turned that around. So I appreciate you being here together today, and I look forward to supporting these young entrepreneurs like Zach. Thanks.
Time of the gentleman has expired. Today we welcome the testimony of the Honorable Stephen Mnuchin, United States Secretary of Treasury. Secretary Mnuchin has previously testified before our committee, so I believe he needs no further introduction. Without objection, the witness's written statement will be made part of the record. The chair wishes to inform members that regrettably we do expect a vote series to interfere with our hearing mid-morning. But the Secretary has agreed to stay till 1:30, the customary 3 hours for a Secretary. Secretary Mnuchin, you are now recognized for 5 minutes to give an oral presentation of your testimony. Welcome.
Thank you very much, and it's a pleasure to be here. Chairman Henseling, Ranking Member Waters, and members of the committee, thank you for inviting me today. One of my top priorities as Treasury Secretary is sustained economic growth for the American people. So I'm happy to report that the growth of the economy over the past year was higher than the average of over the prior 20 years and included 2 straight quarters of 3% or higher GDP. The President promised robust growth, and he is delivering on that promise. I'm here today to talk about the Financial Stability Oversight Council's 2017 annual report. This is an important vehicle for providing Congress and the public with the Council's assessment and recommendations relating to regulatory developments and potential risks in the financial system. The report emphasizes the importance of economic growth to maintaining a resilient financial system. Since the financial crisis, we have had time to assess the effectiveness of regulatory reforms and consider their unintended consequences. The report recommends that the Council member agencies address regulatory overlap and duplication, modernize outdated regulations, and tailor regulations based upon the size and complexity of financial institutions. The report also discusses a number of risks that the Council is monitoring. One that I would like to emphasize today is cybersecurity. The financial system's heavy and increasing reliance on technology increases the risk that significant cybersecurity incidents could disrupt the financial sector and potentially impact U.S. financial stability. Substantial gains have been made, but I want to emphasize the need for sustained attention to these risks. The report makes a number of recommendations, including the creation of a private sector council of senior executives in the financial sector to collaborate with regulators in order to mitigate cybersecurity risks. Turning to our growth policies, the Tax Cut and Jobs Act passed last year was our top priority, and this overhaul of the tax code is already having a positive impact. Because of tax reform, over 3 million Americans have received special bonuses or other benefits, and over 300 companies have announced investments in their workforces. Companies are announcing higher wages and increased benefits, as well as greater spending on employee training, infrastructure, and research and development. These investments will lead to long-term prosperity, as well as companies to bring back cash from overseas. Our economy will continue to grow. Let me now turn to some specific priorities. I want to commend both the House and Congress for their work on financial regulatory reform. I appreciate the work of this committee and the House of Representatives to advance the cause of reform by passing H.R. 10, the Financial Choice Act, and dozens of strongly bipartisan bills. This legislation reflects many of Treasury's recommendations from our executive order reports released last year. I encourage the Senate and House to work together to move this legislation as quickly as possible. Last week, I wrote to Congress providing notification of my determination that a debt issuance suspension period would last until February 28th. I respectfully urge Congress to act as soon as possible to protect the full faith and credit of the United States by increasing the statutory debt limit as soon as possible. The House and Senate have been working towards modernization of the Committee on Foreign Investment in the United States, CFIUS. I support the Foreign Investment Risk Review Modernization Act, FIRMA, and applaud Senators Cornyn, Feinstein, and Burr, and Representatives Pittenger and Heck for their leadership on this issue. A modernized CFIUS will enable us to protect our national security. I look forward to working with Congress and the relevant committees to advance FIRMA. One of Treasury's core missions is to safeguard the national by using powerful economic tools. We will continue to take frequent and ongoing actions to combat threats from malicious actors. These include terrorist groups, proliferators of weapons of mass destruction, human rights abusers, cyber criminals, and rogue regimes like North Korea, Iran, and Venezuela. We continue to review intelligence to identify targets with maximum impact, deny them access to the U.S. and international financial system, disrupt their revenue streams, and ultimately pressure for a change in behavior. As you're aware, last week, the Treasury Department submitted a series of reports in compliance with sanctions legislation. These reports represent another chapter in our efforts to use our economic authorities to counter the threats that we face. On housing finance, the current situation of indefinite conservatorship for Fannie Mae and Freddie Mac is neither a sustainable nor a lasting solution. The administration looks forward to working with Congress to reform America's housing finance system in a manner that helps consumers obtain the best housing suited for their own personal and financial situation, while at the same time protecting taxpayers. I am proud of what we accomplished so far, and there is more to do. Our country's potential is enormous, which is why Americans expect their government to enact policies that allow them to succeed and prosper. Treasury's collaboration with Congress is vital to that mission, and we look forward to working with you every day to make it a reality. Thank you, and I look forward to answering your questions.
Thank you, Mr. Secretary. The chair now yields to himself for 5 minutes. And Mr. Secretary, if you could draw that microphone a little bit closer to you. So, Mr. Secretary, on our way out the door, Chair Yellen said that equity values are, quote unquote, quite high, and that, quote unquote, there are potential dangers there. I don't disagree with her. I just thought it was a little curious that a Fed chair on her way out of the door would say such things. But economists, as you well know, have been predicting that once the economy took off, that there would be immense pressures on equity markets. Clearly, markets have been roiled. We know that fortunately, markets are still up over 20% in the administration, but we've had huge volatility over the last few days. Could you give us your view on what's going on here?
Sure, Mr. Chairman, thank you very much for that question. First, I would say we are very focused on the long-term economic growth, and we believe that the policies that we've enacted, including tax reform, are very positive for long-term economic growth. We're already beginning to see that in terms of corporate investments back into the United States and the impact on corporate earnings. I think, as you said, the stock market is up significantly, over 30% since President Trump was elected. We're monitoring the stock markets. They're functioning very well, and we continue to believe in the long-term impact of the stock market. So thank you.
Mr. Secretary, on page 6 of the FSOC report, you call on Congress to create a more, quote, sustainable housing finance system, unquote, for the sake of, quote, financial stability. We know it has been 10 years since the financial crisis, and regrettably, Congress has failed to act. If we once again fail to act, and some of us are trying to work on bipartisan housing finance reform, but if we fail to act, isn't it true that roughly a year from now, the president gets to appoint a new FHFA director who will serve for a 5-year term? Is that correct?
That is correct.
And isn't it true that the FHFA director is not just the regulator of the GSEs, but also the conservator? Isn't that correct, Mr. Secretary?
That is correct.
And isn't it true that as conservator, the FHFA director has broad, sweeping powers? For example, I believe, is it not true that if Congress fails to act, the FHFA director could discontinue the GSE's HARP, or Home Affordable Refinance Program? Isn't that true, Mr.
That is correct, Mr. Chairman.
And isn't it also true that the FHFA director could suspend all GSE contributions to the Housing Trust Fund if they found that they would, quote, contribute to the financial instability of Fannie and Freddie? Isn't that true?
That is correct.
Isn't it also true, Mr. Secretary, that under 12 U.S.C. 4566, that the FHFA director can essentially choose not to enforce the statutory housing goals of the GSEs if he finds that, quote, the achievement of the housing goal was or is not feasible? Isn't that correct, Mr. Secretary?
That is correct.
So I would hope that all within earshot have listened carefully at what might happen if we choose not to engage in GSE reform. And again, we look forward to working with you, Mr. Secretary, with the administration, with my friends on the other side of the aisle, in hopes that we can find America a truly, truly sustainable housing finance system, one that helps put people into homes they can actually afford to keep. Different question, Mr. Secretary. Today, FSOC has designated 4 non-bank financial companies as SIFIs, but today only Prudential remains designated. As you know, under statute, FSOC is required to reevaluate these designations at least annually. Can you tell me the last time Prudential's designation was last reevaluated?
I believe it will be coming up, but it has not been evaluated recently.
Is there a specific time frame for its reevaluation, Mr. Secretary?
My expectation is it will be in the near future this year.
Okay. We know that a couple of weeks ago, the administration chose not to drop the government appeal of the MetLife litigation. So essentially, they have been de-designated. We know that an Article III court found the designation process of MetLife to be, quote unquote, fatally flawed. But wasn't it the same fatally flawed process that led to Prudential's designation?
Mr. Chairman, I'm not going to make the comment on Prudential, but I will make the comment on MetLife, as you've said. The majority of the members of FSOC recommended to the Justice Department to drop the case, and we will be working with the committee on revised guidelines for designations.
Well, I've read where those revised guidelines, I think, will include a cost-benefit analysis to the economy and its impact on jobs. I look forward to that. My time has expired. The chair now recognizes the ranking member for 5 minutes.
Thank you very much, Mr. Chairman. Pursuant to Clause D4 of Committee Rule 3, I request recognition to question the witness for an additional 5 minutes upon the conclusion of the time allotted to me under the 5-minute rule.
The ranking member is recognized for 10 minutes.
Thank you very much. I'd first like to ask about the subject of my most recent letter, which is your department's role in Section 231 of the Countering America's Adversaries Through Sanctions Act. Congress passed this law on a broadly bipartisan basis with the clear objective of punishing Russia for its brazen attack on our democracy. Mr. Secretary, do you believe our intelligence agencies, as they have said to us, that Russia did hack into our DNC and undermine our democracy? Do you believe that to be true?
Again, I will broadly say I do believe in the intelligence assessment. I want to refrain from comments specific that are classified. But yes, I broadly believe in the assessments.
Even the findings section of the law explicitly references the intelligence community's finding that Russian President Vladimir Putin ordered an influence campaign in 2016 aimed at the United States presidential election. The findings also recognize the intelligence community's warning that Moscow will apply lessons learned from its Putin-ordered campaign aimed at the U.S. presidential election to future influence efforts worldwide, including against U.S. allies and their election processes. Do you believe that to be true?
I have no reason not to believe it to be true.
So given the importance of the law's very purpose, I'm wondering why this administration continues to let key deadlines in the act come and go without taking any action to implement the act and punish Russia for its crimes against the American people. Now, one provision of the law, which the administration has ignored, is Section 231 of the act. This section requires that the president sanction persons he has determined to have engaged in a significant transaction with Russia's defense and intelligence sectors on and after January 29, 2018. As you know, the law also allows the president to waive or delay these sanctions. However, to date, this committee has received no indication that any sanctions have been imposed, waived, or delayed. And last week, when you testified before the Senate Banking Committee, you stated that you did not waive or delay sanctions. Section 231 of CATSA is clear that the president has 6 months from the date of enactment to determine which persons are engaged in sanctions with the Russian defense and intelligence sectors. After 6 months, the president must impose sanctions on such persons or waive or delay imposition of the sanctions. Yet, despite the fact that the deadline for action has come and gone, no sanctions have been imposed, waived, or delayed pursuant to Section 231. How can you explain this?
The section that I believe you're referring to has been delegated to the State Department, so I can't comment for Secretary Tillerson on that. I can comment on the portion that we were responsible for, which was the oligarch report that we did deliver on time, and as I testified in the Senate, there will be sanctions coming out of that report. And again, I want to commend the work that was done on the Intelligence Committee on the classified version.
Who's responsible for delegating what was passed by an overwhelming majority of this House to the State Department?
The President was.
So the President decided that despite the fact that in the law that we passed delegated responsibility to Treasury, that he decided that he wanted it to be delegated to the State Department rather than Treasury, and this is your excuse for not having implemented the law. Is that correct?
No, it's not my excuse, and again, I believe, but we'd be happy to sit down with you and go through the details of this. The President had the authority to delegate Within that, as he chose fit, again, the portion that you're referring to was delegated to the State Department. The other portion was delegated to us.
But the final conclusion is that nothing has been done. There has been no waiver. There has been no delay. There's not been anything that has been done. You did not waive or delay sanctions. That is the conclusion, whether we're talking about Treasury or the State Department. Is that correct? Nothing has been done on sanctions.
Again, on our side, there's been an enormous amount of work done. I want to commend the Intel community, and there will be sanctions that come out as part of that. I can't comment on the State Department's part of the package.
Would you describe the enormous amount of work that the Treasury Department has done that you just alluded to? What have you done?
Again, I would encourage you to look at the classified report. It is incredibly extensive. It is a work product of the Intel and the Treasury, and that work product is now being used for the basis of developing sanctions.
Are you telling me that in your response to the overwhelming majority of this Congress having created law to impose sanctions on Russia that undermined our democracy, that your response is classified? Is that what you're telling me?
Again, what I've said is part of the report was unclassified, part of the report was classified. I assure you that as it relates to the work being done at Treasury, there will be sanctions. And again, there is a lot of ongoing work that is being done to develop those sanctions, and we complied with the law on time.
The Congress of the United States does not know what you are doing. The Congress of the United States does not expect that your response to the public policy that was developed by us be somehow responded to in a classified way. Is there anything that you can tell us that you have done?
Well, again, the law called for both a classified portion of the report and an unclassified. Given that the majority of the work was developed on a classified basis, we classified the report. I'd encourage you and other members to look at it. It's an extensive amount of work. Again, that the first phase was to develop the report and deliver it, which we did on time, and now we are developing sanctions on it. So I assure you we are very focused on this.
Well, I would encourage you to encourage the President to declassify any information that should be forthcoming to this committee, just as he was able to do in the Nunes memo. He used his power of the President to declassify. I would suggest to you that if information is declassified, that should be available to this Congress, who voted overwhelmingly for sanctions on Russia, who undermined our democracy. Those sanctions should be not delayed or waived, and we should have information about it. Let me continue. Is it the Treasury Department's position that no persons are engaged in significant transactions with Russia's defense and intelligence sectors?
Again, I'm not going to comment on that because that's not the portion that we're doing the work on.
Would you tell us again, what are you doing the work on?
Again, we did the work on what was referred to the oligarchs, as well as senior government officials. We detailed in the report where there was evidence of corruption, family relationships, net worth. We complied with a very extensive report that, as I said, there's a classified version and an unclassified version, and we will be using the intelligence work where there is indications of corruption to follow this up with sanctions, which are a very effective tool that we intend to use.
Are you referring to the work that you did on the oligarchs as the list of oligarchs that you lifted from the Forbes report?
Again, we were very clear that the public non-classified version is the universe that we looked at and was developed on open source, both the oligarchs and the leaders. The classified report goes through that list in a very detailed manner, as well as other people that weren't on that list that would have fallen below the billion-dollar threshold. So again, I'd encourage you to review the report. I think you'll be impressed with the findings.
But let me just ask you, was there any persons identified that was engaged in significant transactions with Russia's defense and intelligence sectors. You don't have to give me their names, but I want to know, did the Treasury Department identify any persons?
Again, that portion of the act is not the work that I'm familiar with. The portion of the act that I'm familiar with is corruption. We did identify people that were involved in corruption, and we will be using that to come out with sanctions.
Let me just continue. Last week, it was reported that CIA Director Pompeo met with senior officials in Russia's intelligence service, one of whom is subject to U.S. sanctions, and the other of whom is subject to European sanctions. This meeting occurred just prior to the deadline for implementing sanctions on those engaged in significant transactions with Russia's defense and intelligence sectors. These are the same sanctions that the president has refused to act on. As reported in the Washington Post, current and former U.S. intelligence officials said they could not recall so many heads of Russia's espionage and security apparatus coming to Washington at once, meeting with a top American official. Are you at all troubled by the curious timing of a meeting between Russian intelligence and U.S. intelligence just days before the president failed to take action to implement sanctions pursuant to Section 231 of CATSA?
No, I'm not troubled. I believe that timing was just coincidental, and I believe there were various issues that the director wanted to discuss.
I'm sorry, I can't hear you.
I said I am not troubled by that. I believe that the timing was coincidental and had nothing to do with the reports.
The time of the gentlelady has expired. The chair now recognizes the gentleman from Michigan, Mr. Huizinga, chairman of our Capital Markets Subcommittee.
Thanks, Mr. Secretary. I'm going to move very quickly through a couple of things, but first and foremost, I need to remind my colleagues that we can go see classified information and that briefings have been offered by the Secretary and by others. I also want to touch a little bit on the economic growth that we're seeing, and in my opening statement, I talked about Zach Booker, my constituent, and the fundamentals of Main Street being solid, but seeing technical corrections in Wall Street is okay. But you know, the interesting thing, this yarn that somehow President Trump inherited this great economy is quite amazing. First of all, he had 1.2% growth in the first quarter as he came in to office. That has grown into a 3% growth for the year, never reaching 3% growth in a calendar year with the Obama administration. And so I think we have seen the economy respond. FSOC and stability requires broadening of those that participate in the marketplace, and that's kind of where I want to go. We have seen a number of public companies decline by 50%. Since 2000, the average number of IPOs, or initial public offerings, has been about 135 per year versus 450. In 2016, there was only 112 IPOs. This decline has been very troubling to many of us on the committee, both sides of the aisle. SEC Chairman Clayton noted, quote, "The reduction in the number of U.S.-listed public companies is a serious issue for our markets and the country more generally. To the extent companies are eschewing our public markets, the vast majority of Main Street investors will be unable to participate in their growth. The potential lasting effect of such an outcome to the economy and society are, in 2 words, not good." You know, Zach isn't ready to bring his barbershops and his other companies public yet, but I'm afraid that the Zach Bookers of the world aren't going to be able to do that in the long run. And I'm curious, in your opinion, what are the 3 top impediments that are chilling this IPO market or discouraging companies from accessing capital in the public markets?
Well, thank you, and I appreciate the work you're doing on capital markets. In the report we did, the executive order, we go through an extensive review of different things that we think can make it easier for companies to access the public markets, particularly smaller companies, with proper regulation. So I'd encourage you to we can go through the details with you, but there's a long list of things we recommended.
Yeah, and I recommend that my colleagues take a look at that because I think this is the glide path and the direction that we need to go. I want to move on to maybe one of those impediments, in my opinion, the Volcker Rule. I'm afraid that it's had a chilling effect on the liquidity in the markets and the U.S. financial institutions. And a couple of quick things. In testimony in March of 2017, we had a hearing in the Capital Markets Subcommittee and on the Volcker Rule, and Ronald Krzyzewski, chairman of and CEO of Stiefel, testified that, quote, to determine whether an activity was proprietary trading or legitimate market-making, compliance expert would also need to be a psychiatrist trained in determining to the intent of each trade by a trader. In an April 7, 2017 speech, the New York Fed Reserve Bank President William Dudley commented, quote, the line between market making and proprietary trading is not always clear-cut, which makes regulation in this space difficult, and, quote, that it may be worth considering even greater discretion to trading desks that facilitate client business to intervene when markets are illiquid and volatile. Do you agree with Mr. Dudley's assessment?
I do, and we are working with the regulators to try to have better definition around the law and the rules so that people can interpret it.
And do you believe it would make sense for one regulator to take the lead to interpret that guidance?
I do not.
Okay. I do want to highlight one other quick sort of oddity in this. We have a Michigan-based energy company that owns an industrial bank in Utah, where many of those ILCs and industrial loan corporations are. And because of its ownership interest in the bank, energy company is considered a banking entity under the Volcker Rule, and since non-financial parents of industrial loan companies are being treated as bank holding companies under the Volcker Rule, if an investor breaches a 10% holding and ownership in this non-financial parent, it's deemed to be controlling a bank and is then itself subject to the Volcker Rule. If the Volcker Rule did not apply to non-financial parents of industrial loan companies, do you believe that it would pose a systemic risk to the financial system?
No, I do not.
Well, thank you very much. I appreciate that, and we'll continue to work on that and look forward to working with you, Mr. Secretary.
Thank you.
Thanks. I yield back.
Gentleman yields back. Chair now recognizes the gentleman from Missouri, Mr. Lukemeyer, chairman of our Financial Institutions Subcommittee.
Thank you, Mr. Chairman. Mr. Secretary, thank you for being here again. I just want to also reiterate my support and thanks for working with us on the tax cut bill, tax reform bill. I know I've got two quick stories for you. I know when we were discussing the tax bill with some of my folks back home, I had a small women's business roundtable, and at that roundtable, when I got done discussing what we're going to try and do, one of the ladies there who had a glass shop, 16 employees, said, if you cut my taxes, Congressman, we will reinvest that money and we'll hire some more people and expand our business. This past weekend, I was back home. I was talking to another small business, and in your testimony today, you talk about 3 million people receive bonuses, 300 companies announce investments. I'm sure this particular company is not in those figures, and there's probably thousands of other folks just like them, but they'll give a $500 bonus to all their employees, and this is a small business. So there's lots of people across the country that are receiving these bonuses, and when they say the ripple effect, I think it's more like a tsunami that's starting to go across our country from the standpoint of how important this is to the citizens of our country. So thank you for that. With regards to your testimony today, and something I'm working on myself, one of the things that we're doing in my subcommittee is working on data security, cybersecurity. And in your testimony today, you talk about the council is monitoring the cybersecurity risks and have a number of recommendations, and one of them is the creation of a private sector council of senior executives. Can you elaborate a little bit more on FSOC's endeavors in cybersecurity, data security, and some ideas of things you're working on?
Well, thank you. It is an issue I'm very much focused on. I think protecting the financial infrastructure is of critical concern to ours. And our 2 priorities is one, making sure that the various different regulators are working together, that they're pooling their resources to focus on this issue, and 2, that we develop the proper public-private partnerships to be able to exchange information, best practices, and also we've been conducting different tabletop exercises in case there is an event.
Just 2 more questions along this line. Number one, right now we have a sort of patchwork of rules and laws across the country with regards to the states monitoring and having some input with regards to notification. Wondering how you support a streamlining of this, number one. And number 2, obviously the federal government has a problem with data security as well. We've had a number of breaches that are well known to the public of information that is held by the federal government, and how we would coordinate those as well.
So the first part, I completely agree with you with the idea and the need for streamlining. I think that is very important. And I am participating along with DHS and other groups at the National Security Council on cyber to make sure that we are coordinated across government, because as you've said, we are not immune from these issues ourselves, and making sure that what we learn from attacks against us, we are also using to protect private industry.
Very good. One of the main objectives of FSOC is to designate systemically important financial institutions. I know I have a bill that deals with this with regards to some of the mid-sized regional banks that are impacted by this, that I think they're not part of the problem. They've been roped in as part of the solution. But and one of my solutions to this problem is using the Federal Reserve's process by which they have a systemically important risk indicator score. Does FSOC take into account this Federal Reserve score whenever you're discussing SIFIs?
I haven't seen that per se in my experience, but we will look into that, and I think that's something that we should consider.
Yeah, because it seems like we don't need to reinvent the wheel if the Fed's already doing the analytical work of looking at what a systemically important financial institution is, and by their score, indicating which ones are and which ones aren't. It would seem to be a very helpful tool to FSOC to be able to utilize that.
Yeah, we use a lot of work from the Fed. They're very helpful, and I will look into the scoring issues and follow up with your office. Thank you.
I've got about 35 seconds left, Mr. Secretary. Would you like to respond to any kind of the questions that were directed to you a moment ago by the ranking member?
No, I'm okay for now, but thank you for that option.
Mr. Chairman, we'll allow the Secretary to reserve my 30 seconds. With that, I yield back.
Do you want to yield to the ranking member?
The gentleman yields back. The chair now recognizes the gentlelady from New York, Ms. Maloney, ranking member of our Capital Markets Subcommittee.
Thank you, and welcome, Secretary Mnuchin. As you know, yesterday the stock market suffered its worst day in 6 years, with the S&P down 4.1% and the Dow down 4.6%, and it looks like markets are plunging even further today. You are the chair of the Financial Stability Oversight Council, and I want to know, are you concerned about this recent market rout, this recent market turmoil?
Well, first of all, I just comment they have been quite volatile today. I normally wouldn't be looking at my iPhone, but given the market moves, I'm checking it. It's now up 187 points, so we're back up today. I'm not overly concerned about the market volatility. I think the fundamentals are quite strong. I have checked in with market participants this morning before I came to make sure that there was orderly market activity, clearance functioning, no systemic issues, and I'm happy to report that I got the green lights.
Well, do you believe, does this have financial stability implications?
No, I don't think these types of moves, given how much the market has rallied, do have financial stability concerns.
Well, the administration has claimed credit for the markets going up. Are they going to claim credit when the markets go down?
Again, I think we'll still claim credit for the fact that it's up over 30% since the election.
Well, let's move on to your testimony on cybersecurity, which you called one of the biggest risks to the financial system. And it is a very serious one, and it's a huge problem, particularly for virtual currencies like Bitcoin and Ether. And virtual currency exchanges are constantly being hacked. A few years ago, the largest Bitcoin exchange in the world was breached and lost over 450 million worth of Bitcoin. And just 2 weeks ago, another virtual currency exchange in Japan was hacked, and they lost $550 million worth of virtual currency, the largest heist in history. A recent report found that about 14% of all of the major virtual currencies have been stolen by hackers, and this means that if you hold a major virtual currency, there's a 1 in 7 chance that you've had your money stolen, a staggering statistic. But right now, these virtual currencies, their exchanges aren't subject to any real cybersecurity standards. Just last week, SEC Chairman Clayton said that he thinks some exchanges should be regulated by the SEC, which would require them to develop cybersecurity standards and to prevent fraudulent practices like price manipulation. So my question is, given that virtual currency exchanges are collectively holding billions of dollars for U.S. investors, which can disappear in the blink of an eye if hackers break in, should these virtual currency exchanges be subject to minimum cybersecurity standards to protect investors' money? It is a currency, but it is being treated by many people as an investment, so I'm very concerned.
I broadly share your concerns. Last year, I set up a subcommittee of FSOC to specifically deal with cryptocurrencies. We've made a lot of progress on that. You've focused on several issues which I agree with. The two issues that I've focused on are, one, we want to make sure that these exchanges can't be used for moving money to bad people. So in the United States, if you're a Bitcoin wallet, you're subject to the same anti-money laundering BSA requirements as a bank. We've brought enforcement actions on that. We're working with the G20 to make sure that those rules are followed in other countries so that these don't become like old Swiss numbered bank accounts. The other area of grave concern is the concern to the consumer. We've recently had futures listed. We've done a lot of work with the regulators to make sure that where there is consumer protection, it's appropriate. And I too share your concerns about the cyber attacks and having people's money that's safe. So this is something we're actively studying, and we'd be happy to follow up with your office on your ideas.
Thank you very much, and I do have a draft bill I'd like to share with you. And finally, do you think Congress should raise the debt ceiling as part of the short-term continuing resolution this week?
I think that Congress should raise the debt ceiling. However they want to do it, I leave it to them, but I would encourage Congress to do that.
Time of the gentlelady has expired. The chair wishes to advise members that there is a vote.
And then they come in today and say, I don't want to talk about GDP of 3% growth where it was less than 2 under Obama. I'm not talking about manufacturing jobs coming back to America. I'm not talking about the great policies over the last year. What I'm talking about is Russia. I want to talk about Russia. And by the way, when we talk about the economy, that I have friends across the aisle who will say $1,000 or $2,000 is crumbs? Give me a break. I don't know where you guys live, but that's a lot of money where I come from. Or if you get a $2,000 extra amount of money in your paycheck over a year, that's a lot of money. To call it crumbs or to call our tax code Armageddon, that's out of touch. You want to talk about you want to talk about Russia and collusion? All you have is the Hillary Clinton campaign and the DNC, including with Fusion GPS, Christopher Steele, and the Russians to take down an American president who fairly won an election. You want to talk about Russia? You can talk about Uranium One and a payoff to the Hillary Clinton campaign to get an approval, or the Clinton Foundation to get an approval for Uranium One, if you want to talk about Russia. This is ridiculous that these are the things that we're talking about, Mr. Secretary, and I'll ask you actually questions that are relevant to, I think, our committee. Yesterday, the Wall Street Journal reported that there were 1,700 banks that have closed in the last 12 months. Did you see that article?
I did.
Many of those banks came from rural America, places where I come from.
Yes.
What is the root cause of these branch closings, and what impact does it have on now communities that are in rural America that may now not be served by a bank?
I think a general issue is the cost of regulation for community banks, and that's why we're hopeful to look at Dodd-Frank reform that helps community banks, and those communities need those banks to lend.
Mr. Secretary, I thought all those regulations were only for the big banks. Are you saying that Dodd-Frank actually imposed regulations on the small community banks that serve rural America?
Yes, indeed.
Oh, I'm surprised by that. They're going out of business, right? Because they can't comply.
Yes.
Or they consolidate, right? They consolidate, and then when the bank they consolidate with says, well, that's not a profitable branch anymore, we're going to close it. I want to talk about the fundamentals. So we talked about the market. Markets are down. A couple bad days in the market. Is this in coordination with a lack of fundamentals in the economy? Do we have problems in the economy with growth or wages or jobs that are being reflected in down market?
No, the fundamentals are quite strong.
How so? What's the disconnect between a market coming down and fundamentals being strong?
I think you've seen a normal market correction, although large, and I think, again, there's just a disconnect in the short term. Markets move in both directions.
Could strong fundamentals actually bring down a market a little bit, recorrect, just because you might be concerned about inflation, there might be concern about raising interest rates? Could that be a concern for the market?
It could be, as you suggest.
Any concern in the fall yesterday with algorithmic trading that could have heightened the losses that took place yesterday?
It definitely had an impact on market moves.
Anything we should be considering based on those market moves from that?
Nothing that I would recommend at this time.
Okay, and I want to be clear as my time is about to end. When we talk about FSOC and designating financially or systemically important institutions, we now have a threshold on size. Is it your contention that we should actually look at the activity surrounding the financial institution as opposed to the size?
It is my recommendation that we should definitely raise the level, and we should also look at activities.
Okay. Listen, and I want to thank you for your testimony. I'm sorry about some of the questions that have come your way, but I want to applaud your efforts to actually work with us to lower tax rates that have had a huge impact on the American family with the bonuses, with the increase in their paychecks. Though the other side should be dancing in the streets, they should be dancing in the aisles, they should be applauding. They are not, because this is not about people, Mr. Secretary. This is about politics. And because they all voted no, they can't celebrate the win for their communities and for our country, and I yield back.
Time of the gentleman has expired. The chair again advises all members a vote is occurring on the floor. The chair now recognizes the gentlelady from New York, Ms. Velasquez.
Thank you, Mr. Chairman, and welcome, Secretary. You know, the issue of making sure that our democratic institutions are intact should be a responsibility of everyone. And after all, we all voted for the sanctions against Russia. Mr. Secretary, the history between the United States and Puerto Rico is one full of legal, political, economic, and social injustices. While 5 minutes won't be enough time to go through the list of things where U.S. policy has failed Puerto Rico, allow me to highlight how your administration has managed to further worsen conditions. After one of the worst natural disasters, your administrations continue to ignore Puerto Rico's healthcare system, a system that is crumbling before our eyes. The difference in Medicaid funding, such as lower matching rates, places a much greater burden on Puerto Rico than on other states. In addition, President Trump fails to see that the new tax law you all brag about is actually harming Puerto Rico at a time when Puerto Rico needs our help to jumpstart its economy. Let us be clear. The new tax law discriminates against Puerto Rico, removing the special incentives that the island relied on and treating Puerto Rico as a foreign country. Treating Puerto Rico as a foreign country that has over 100,000 active duty troops ready at any given time. A foreign country that from 1998 to 2016 has paid approximately $74.4 billion in federal taxes. Tell me which country around the world pay federal taxes to the U.S. Treasury. Puerto Rico does. Yet, because of its treatment as a foreign country, the new tax law imposes a 12.5% tax on the income companies receive from intellectual property. What a way to kill the manufacturing sector in Puerto Rico. Another example of this unequal treatment is the community disaster loans that were included for Puerto Rico in the October supplemental. Loans instead of grants. Another insult. Don't you agree with me that this is outrageous, that is cruel, that when a natural disaster strikes and people ask for disaster relief, paper towel is an insult? So, Mr. Secretary, my question for you is it acceptable, in Treasury's opinion, to fund and provide disaster relief so slowly that it has taken the lives of more than 1,000 residents in Puerto Rico, that over 270 Puerto Ricans have committed suicide on the island after Maria, that almost 30% won't have power until this summer, nearly a year after Maria? Would this be acceptable in Houston, Louisiana, or Florida? I am sure people will be rioting in the streets. Do you think the people of Puerto Rico are any less entitled to restoration of essential services than any other U.S. citizens? So, Mr. Secretary, please tell me if this is acceptable.
Well, let me first comment that I do share your concerns. It is first.
I want for you to share my outrage.
Any loss of life is a great tragedy. As it relates to the various different topics that you've discussed, I'm personally not familiar with the health care issues, although I will follow up and look into that.
What about the tax bill, treating Puerto Rico as a foreign country? As
it relates to the tax law, and again, I've had the opportunity to meet with various business and things. They have a situation where they're collecting their own taxes in lieu of federal taxes. And the last part I would just say is we are working very closely with the government to get them funding to deal with the result of it.
How many more
The
lives
time of the
have to-
gentlelady has expired. The committee now stands in recess. The committee will come to order. Chair now recognizes the gentlelady from Missouri, Ms. Wagner, Chairman of the Oversight and Investigations Subcommittee.
Thank you, Mr. Chairman. As we sit here today and hear testimony about the continued onslaught regulations have had on Main Street America, it's worth noting the positive gains that we've made because of the Tax Cuts and Jobs Act. Charter Communications, which has a very large presence, Mr. Chairman, in Missouri's 2nd Congressional District, upwards of 5,000 employees, Mr. Secretary, that represent 5,000 hardworking Missouri families. They have recently volunteered to pay every one of their employees at least $15 an hour, and in addition to increase the investment in their broadband network. This is going to absolutely benefit working families and small businesses across my districts. These are pro-growth promises that we made and have delivered on for our constituents. I want to thank you, Secretary Mnuchin, for your fine work in making sure that all Americans keep more of their hard-earned money and we continue to grow this economy. Now, sir, last week, the Subcommittee on Oversight and Investigation, which I chair, held a hearing entitled Following the Money: How Human Traffickers Exploit U.S. Financial Markets. During that hearing, we talked a lot about the emergence of cryptocurrencies as a financial tool. I know you touched on it briefly, but the FSOC annual report identifies a need to further study new products and services such as virtual currencies and to coordinate regulatory approaches. How do you believe these new technologies should be regulated, and what role should we in Congress have going forward as these new innovations are advanced?
Thank you. My main concern in terms of regulation is to make sure that anybody that does business on cryptocurrencies can be monitored from a money laundering, a BSA standpoint, and that the institution follows the Know Your Customer rules. So that's our main priority now, but we look forward to working with you on potentially other regulations.
And what do you see as FSOC's role in this process, sir?
FSOC is coordinating the different regulators' response to it, so it's a coordination function.
We look very forward to working with you and your
Thank you.
team in this important area that is emerging. Now, Secretary Mnuchin, changing topics here, can you discuss your recommendations to address designation criteria, especially when it comes to our non-bank financial companies? The FSOC Treasury report recommended that the designation process for non-bank financial companies be more transparent, including getting input from a company's primary regulator. What are the steps that Treasury plans to take to make the designation process more transparent and ensure the FSOC is held accountable to Congress?
Thank you. So as you noted, we did extensive work in our executive order to the President on this, making recommendations. We'll now be working with the committee on suggestions in terms of changing the criteria, and then I believe we'll have to put out a notice of rulemaking before we enforce it. But this is something we're very focused on for this year.
Last March, the Subcommittee again on Oversight and Investigations, which I chair, held a hearing entitled The Arbitrary and Inconsistent Non-Bank SIFI Designation Process, and the hearing followed up on a committee report that provided examples of inconsistencies and departures from, frankly, FSOC's own rules and guidance when evaluating non-bank financial companies. I hope this is something that we'll look into and be able to coordinate going forward. Do you have any timing on this, sir?
Absolutely.
Thank you. I appreciate it, Mr. Chairman. I yield back the balance of my time, or I shall yield to you if you would like, sir.
I thank the gentlelady. She can yield back her time. The chair now recognizes the gentleman from California, Mr. Sherman.
Mr. Secretary, you were here in July. Democrats and Republicans gave you questions for the record, and we got responses to those last week, 6 months. Can you commit now that the vast majority, I plan to answer one or two really tough ones, but that the vast majority of the questions for the record that are asked by Democrats and Republicans today will be responded to with real answers within 30 days?
I can tell you that I told my staff I thought our response time was
Can you
not
make the
appropriate.
commitment I asked, or just apologize for the past?
We will do everything we can to make sure it's 30 days, but it won't be as long as it took last time, I can assure you.
Okay, because I have a number of questions for the record. I need answers, and the first relates to the FSOC report to base SIFI designations on activity-based, an activity-based approach. I want to commend you for moving in that direction, and I'm interested in your plans for implementing recommendations of the Treasury's asset management and insurance report, and the report on non-bank SIFI designation process, in particular the recommendation that an activities-based approach be used. So I'll ask you to respond to that for the record. Also, we hear that the International Association of Insurance Supervisors is pushing a global standard that clashes with our system for state-based insurance regulation, and I want to know your reaction to that, and whether we can ensure that we're going to promote our own system in that negotiation.
I can assure you we will.
Thank you. Now, last time you were here, I asked you about the Armenia Tax Treaty. Didn't expect you to know that I'd ask. Well, I did tell your staff in advance. And we have gotten the most absurd response. I'm an old tax lawyer. I know it's hard work, but this is the easiest job they're ever going to have. They responded to Judy Chu, who also raised this, by saying that this is a very resource-intensive process. Here's the model treaty. We've published it. And the government of Armenia has said they just want to sit down and use this as the basis and get the treaty done. 28 members of Congress have asked you to do this. Can you commit to investing 28 hours of one tax lawyer, just 28 hours of that one tax lawyer's time, and to start the process, I think he or she will finish the process. We're talking about filling in the blanks in a document we already have. Can you commit 28 hours of one tax lawyer's time?
I can commit the 28 hours, but
We will get it
sure
done,
makes
and the
sense.
benefits will include the exchange of information provisions, which will allow the IRS to get information about anybody hiding assets in Armenia, and thereby enhance our tax collection process. When it comes to marijuana, we currently have the FinCEN guidance. And if you were to revoke that, then that would really make it better for armed robbers in my community, because there'd be huge amounts of cash at the local marijuana dispensary. Can I have, well, I hope you'd respond for the record what you plan to do, and I hope that you would indicate that you're interested in keeping our communities safe. I don't want bags of cash at a marijuana dispensary down the street from my constituents. Can I count on your answer on that?
I can commit to you that we are reviewing it, but I assure you we don't want bags of cash. Want to make sure that we can collect our necessary taxes and other things in other than cash.
When you were here last time, you assured us that although we didn't designate China as a currency manipulator, even though we've lost a lot of jobs to their admitted past currency manipulation, that the Trump administration was going to do something about this. In back of you, we've got the chart that shows that every month that Trump has been in office, we've seen an increase in the trade deficit with China. Are we just going to talk tough, or when you come back a year from now, are we going to see a different chart?
I think you're going to see a different chart.
Okay, and if we don't, can you then designate them a currency manipulator?
No, one has nothing to do with the other. One is we are very focused on trade. The currency manipulation, independent of that, will
But
be
they
based
have
upon their
secured
actions.
markets by their past manipulation of currency, and I yield back.
Time of the gentleman has expired. The chair now recognizes the gentleman from Kentucky, Mr. Barr, chairman of our Monetary Policy and Trade Subcommittee.
Secretary Mnuchin, good to see you this morning, and I want to thank you and the administration for the Tax Cuts and Jobs Act on behalf of constituents in Kentucky's 6th Congressional District. A couple quick stories. One is Allison. Allison is a bank teller at one of the lowest paid bank tellers at a small community bank in Berea, Kentucky. And she went to her supervisor after they adjusted their tax withholding, and she said, I think you've made a mistake. And he looked at the check, and he said to Allison, no, I didn't make a mistake. And she said, did I get a bonus? And he said, actually, I didn't give you a bonus. The vice president said this to the teller. We didn't give you a bonus, but in effect, you got a bonus, you got a raise because of Republican tax cuts. And then there's Karen. And Karen has been serving me coffee at 5:20 a.m. every morning when I go to the airport to get on that 6 a.m. flight to Washington, D.C. And she's a hardworking person. And she's working the graveyard shift, and she wanted to know what the benefits of the tax cut were. And so we put her paycheck and all of her information through the tax calculator. And when I showed up on yesterday morning, she had a big smile on her face. And she said, Congressman, I'm going to save $1,410 every year because of the tax cuts. And so on behalf of Karen and on behalf of Allison, thank you and your administration for these tax cuts. You're making life easier for working people in Kentucky. I do want to talk about the market volatility that we've seen over the last few days. Obviously, since Election Day 2016, the Dow Jones Industrial Average has soared from a little over 18,000 to a little over 24,000, and I think it's actually up at this moment today. And of course, at one point, it hit an all-time high of 26,617. That represents an extraordinary bull market, and I would agree that in part it reflects renewed investor and business confidence associated with this administration's policies. But I do want to ask about a factor that gets a little less attention, but which explains the adjustment in the equity markets over the last few days, and that is monetary policy. Obviously, for the better part of the last decade, the Federal Reserve, through quantitative easing and low nominal rates, has pursued an unprecedented policy of monetary accommodation. And while this unconventional policy failed to prevent the slow, weak growth produced by the previous administration's fiscal policies, it did prop up asset prices. But as this administration has reversed the previous administration's fiscal policies, the economy has taken off, and you've noted the statistics of record high business and investor confidence, consumer confidence, low unemployment, and the Labor Department report of wages going up last year, average 3% GDP output, and the Atlanta Fed's projection that the first quarter we might see 5% economic growth in the first quarter of 2018. So I would just say it's altogether appropriate that the new leadership at the Fed has begun to address the risk of rising inflation and is proceeding with the strategy of monetary normalization. My question is this, Secretary, in your capacity as chairman of the Financial Stability Oversight Council, can you comment on how monetary normalization and a steady, predictable, well-communicated withdrawal of monetary stimulus at this time might keep valuations in line with reality, prevent asset bubbles, and promote financial stability?
Well, thank you. I will comment, we have been working with the Fed in following the reduction of their portfolio and the impact of the markets. As it relates to the overall monetary policy, I will respect the independence of the Fed, so I'm not going to comment on its impact on the markets.
Thank you. And then, Mr. Secretary, as you know, the World Bank's International Development Association, or IDA, is scheduled for its 18th replenishment. This committee has examined disturbing cases of management failures at the bank, which has helped bring about massive corruption, abuse of project beneficiaries, including sexual abuse, and staff incentives that reward pushing money out the door rather than having an impact on global poverty. In light of these facts, writing a blank check for IDA 18 would be an insult to the hardworking taxpayers of this country. Last month, the House passed our World Bank Accountability Act, which would make spending on IDA 18 contingent on implementing reforms. And I want to thank Treasury staff for working closely with us on developing tough but achievable reforms. To underscore how important this legislation is, this was the first time in 40 years, Secretary, that Congress considered a standalone IDA bill, and it also happens to be consistent with President Trump's policies. As he said in his State of the Union address, quote, I am asking Congress to pass legislation to help ensure American foreign policy dollars always serve American interests and only go to friends of America, not enemies of America. Mr. Secretary, the House World Bank bill delivers on the President's call of action. Could you just comment briefly on how you can work with our friends in the Senate so that they adopt a similar approach to IDA?
Well, we applaud your work on that, and we look forward to working with the Senate so that we can get something passed.
Thank you. I yield back.
Gentleman yields back. The chair now recognizes the gentleman from New York, Mr. Meeks.
Thank you, Mr. Chairman. Chairman, welcome. Let me first just ask a couple of questions because I think that I'm unclear. First, I think I heard you say that you will be asking Congress, particularly many of my colleagues on the Republican side who generally sometimes don't want to raise the debt ceiling, to make sure that they raise the debt ceiling when it expires. Is that correct?
That is correct.
Okay. So because I don't know sometimes in listening to folks, I just want to get the flesh. So does debt matter in our economy?
It does.
Okay, it does. And what's better for the American economy, because I'm confused on this one also, because I've heard, especially from the administration, both sides, what's better, a weaker dollar or a stronger dollar?
I'm not going to comment on the dollar. I think some of my comments were taken out of context.
But that's what I'm trying to clear it up.
That
if it was taken, it was a comment.
In the long term, a strong dollar is in the best interest of the United States, and that's what I said in my comments.
Okay, because what I had you quoted says, obviously, a weaker dollar is good for us as it relates to trade and opportunities.
Again, that was just a statement of fact. There were three parts to it. The first part was that we fundamentally believe in the free markets. Where the dollar is in the short term is not a concern. The second one you quoted was just a fact, and the third one was that we fundamentally support a strong dollar in the long term.
So you support a strong dollar. That's what you're telling us now?
That is correct.
Okay, so the other statements we should not consider. Now, in time of recession, is stimulus important or not?
It depends.
It depends. Well, in times of crises, because I don't know if you were not here, but I was here because I listened to some of my colleagues on the other side. In 2007, when we were having the greatest recession since the Great Depression, by the way, it's the time that right before that in 2006 is when the Republicans controlled the House, the Senate, and the presidency at the same time. We had a Republican Treasury Department come over and say we had to do something because things were going crazy. Would that have been an appropriate time to try to stimulate the economy when you had that kind of recession?
Again, that would have been one of the things to consider.
Okay. Would you have considered it had you been
I would
in
have
position
considered
at that time? By the way, do you recall what the unemployment rate was in 2007 and 8 and 9?
I don't recall the exact number, but it was higher than where we are now.
Right. It was, in fact, it was at the peak because of the recession, it was at close to 10%. Is that not correct? Does that refresh your recollection?
That sounds about right.
Okay. And at the time that President Obama left, it was down to about 4.6%, I think it was. Does that refresh your recollection?
Sounds about right.
So it went down, and at the time that you came in, the unemployment rate at that point was lower than it had been for over the last 12 years or since the last time that Bill Clinton was president. Is that not correct?
That is correct.
Okay. And is it also correct that when you looked at the overall economy and the number of jobs that was being created, back in 2006 and 7 and 8, we were losing jobs every month. Is that not correct?
That is correct.
Okay. And at the time that you came, or the president came into office, then we were gaining jobs every month. We were adding jobs. The Obama, so you didn't inherit an economy that was in recession, that was with the lowest employment rate, that was going in the right direction. But when you came in, you inherited an economy that was moving in the right direction. Unemployment was going down, jobs were increasing every month. So the experience that you came in was nowhere near the experience that the Obama administration had to deal with when they became in office. Is that not correct?
Again, the experience that we came in with was very, very low GDP growth.
But that's not what I'm asking you about. The trends in the economy at that particular time, the trends with reference to unemployment, the trends with reference to jobs, the trends with reference to the overall economy. It was not an economy that was in recession. It was an economy that was coming out of recession. That's what you inherited, not what Obama inherited when he became president. Is that not correct, sir?
Time of the gentleman has expired. The chair now recognizes the gentleman from Texas, Mr. Williams.
Mr. Secretary, thank you for being here this morning. And I'm a small business owner for 47 years in Texas, still have my business, and I can tell you it's a great time to be on Main Street. And I want to thank you for your hard work on behalf of the American people and for your annual report from the Financial Stability Oversight Council. From overhauling the country's broken tax code to rolling back misguided and unnecessary regulations, 2017 proved to be a historic year for the Trump administration, this Congress, and most importantly, the American people. During my travels in the district I represent in Texas these past months, I've heard countless encouraging stories about what the Tax Cuts and Jobs Act means for Texans and business owners. While some of my colleagues on the other side of the aisle, and we've heard today, have claimed that these bonuses and wages were akin to crumbs, in Texas' 25th district, those crumbs come in the form of real dollars back in the pockets of hardworking families. It comes in the form of increased wages for employees and new capital investment for businesses. It is my hope that this past year serves as a stepping stone for many and more great things to come, and there is still much more work to do, especially from the Dodd-Frank relief to combating the destabilizing and hostile activity from Iran. Know that I'm committed to working with this agenda with you and the Trump administration to ultimately ensure long-term prosperity for our great nation and our citizens. First question would be, Mr. Secretary, you previously testified before the Ways and Means Committee that the Treasury Department is reviewing aircraft sale licenses following the Iran nuclear deal. I'm encouraged by this administration's focus on the world's leading state sponsor of terror and in your efforts to take a hard line on combating its destabilizing behavior. To that end, the House passed my bill, the Strengthening Oversight of Iran's Access to Finance Act, which creates a reporting requirement for the licensing of aircraft sales to Iran in an effort to increase congressional oversight and provide transparency for the American people. So my question, sir, is can you provide any updates on your review of licenses issued for aircraft sales to Iran? And is it your opinion that this Congress and the American people should know if Iran is using passenger aircraft authorized under the JCPOA for terrorist activity?
Well, I do believe that the American people in Congress should know. I don't want to comment it right now because we are reviewing classified information as we consider the licenses for this. So this is an undergoing review.
Okay, thank you. Next question would be, we've heard so many great stories since the last several weeks about how the tax bill is bringing businesses back to the United States. Yesterday, the United Nations Conference on Trade and Development reported that the tax bill could spur the repatriation of $2 trillion. Can you speak to the effect that repatriation and new investments will have on the U.S. economy and what Americans can expect to see in the months and years to come as the tax climate becomes friendly and more welcoming to investors and businesses?
Well, we believe one of the most important aspects of the tax bill was to go from a worldwide system with deferral, which encouraged our companies to leave trillions of dollars offshore, to a territorial system and a one-time tax to bring them home. Apple has announced $350 billion that they'll be coming back into the U.S. with major investment into jobs and CapEx and equipment here, and they're just one of many companies that is going to be doing that.
A lot of good news. Next question would be, I'm certain that our colleagues from the other side of the aisle will highlight the recent volatility. We've heard that today in the market in an attempt to sound an irresponsible alarm about the state of the market. They are clearly viewing the markets in terms of single-day performance and not on the long-term performance. If they were to do so, they'd concede that in the last 15 months, and you've talked about this earlier, the market recorded 84 record highs, and both the Dow and the S&P are still up by double digits during that period. So, Mr. Secretary, from both your time in the private sector, I'm a private sector guy, and now as the head of the Treasury Department, do you believe there to be any cause for alarm?
I do not.
Okay. Thank you for being here, and I'd yield my time back to the chairman.
I thank the gentleman for yielding. Mr. Chairman, I'm sorry, Mr. Secretary, one of the things I think I saw in the Treasury report to FSOC, and since you're wearing two hats here, I guess you're advising yourself, but the Treasury report had advocated to FSOC that basically cost-benefit analysis needs to be employed in the SIFI designation process Can you elaborate on whether or not FSOC is accepting this recommendation, and if so, what can we look forward to?
So yes, thank you, Mr. Chairman. That was part of our recommendation. As I mentioned, we are now working with the committee members to review our recommendations and update guidance. So that's something that I hope will be included.
Thank you. The chair now recognizes the gentleman from Georgia, Mr. Scott.
Thank you, Mr. Chairman. Welcome, Secretary. You know, when I first opened your report, I was very pleased to see where you had cybersecurity as your major concern. However, yesterday I became very worried with one of your FSOC members, Mr. Mulvaney of the CFPB, and I understand that he's pulled back any investigations into Equifax, the largest, most significant cybersecurity attack in this nation's history. 145 million American families having their birth dates, their Social Security number, all of that vital information out in the open. And he is pulled back. And I found this out yesterday in reading the report from Reuters. Are you familiar with that, Mr. Muchin?
I'm only familiar with what I also read in the press. I haven't spoken to Director Mulvaney about it, but I will.
Yeah, I hope you do, because it's very important. You're chairman, as I understand it, of FSOC. You're chairman. And it's FSOC's duty to keep our financial system secure from these kinds of threats. And we have the head of the CFPB rolling back investigations. I not only am asking you to speak with Mr. Mulvaney, but speak strongly. Let him know how bad this looks, and that the American people are very upset that this administration is taking this kind of backward step back from investigating the most dangerous security threat in this nation's history. Please do that, Mr. Muchin. Do you have any reason why Mr. Mulvaney would even do such a thing?
I'm not aware of that, but as I said, it is something I am to discuss with him and we will take up at FSOC.
Yeah, because it will look very hypocritical if on the one hand the administration is so eager in going after cybersecurity, and then on the other hand, having the Consumer Protection Agency to back away. And additionally, the CFPB has even shelved plans for the on-the-ground tests on how Equifax even protects its data. So we've got some very, very significant things there. In my final minute and a half, I do want to raise up the issue of the fintech companies. I'm the Democratic chairman of the fintech caucus. And the fintech industry is going through some remarkable challenges. And they're doing some great things just from simply being able to partner with many of our traditional banks who will not service the underbanked and those that need the help the most, but they are partnering with them. And they're also bringing a way for real great technological improvement. But here's the problem. Since OC has issued or going to issue a charter for their regulation, you have all of these regulators now. The CFP has their group. You have Treasury. I don't know if you have your group, But each of these regulatory firms are now converging and coming up how to regulate this industry. Now, when you have 3 or 4 different regulators out there beginning to pounce, you're going to have overregulation. You're going to quite possibly suffocate this new emerging industry. So I want to ask you, how do you see that? And is Treasury moving? And as the leader of FSOC, will you take leadership in making sure that fintech companies are not suffering?
A very brief answer,
Yes.
Mr. Secretary.
Yes,
I'd
thank
remind
you.
all members to pay attention carefully to the clock. A brief answer, Mr. Secretary.
Yes, thank you. We will address that at FSOC. We share some of your concerns.
Thank you,
The
sir.
time of the gentleman has expired. The chair now recognizes the gentleman from Maine, Mr. Poliquin.
Thank you, Mr. Chairman, very much. Mr. Mnuchin, thank you so much for being here. We really appreciate the great work you're doing. And I want to, in particular, thank you for your leadership in providing tax relief to American families and small businesses. A couple of weeks ago, sir, I was at one of our terrific small businesses in Maine, the Dysart's Truck Stop and Diner, right in central Maine in Herman, right off Route 95, next time you go vacation with your family in Maine. And this fella came up to me and said, Bruce, thank you very, very much, because I get paid on a weekly basis, and I get another $27 in my weekly paycheck. Now, he did the math for me. He said, Bruce, that's about $110 a month, $27 a week, roughly $110 a month. And he said, it's about $1,300 per year. He said, that's really important to my family because it pays for groceries for our families for about 3 to 4 months out of the year. So thank you very much for your leadership on this, sir, and we look forward to helping more American families. I've been very concerned, along with other people on the committee, Mr. Secretary, about how unfair it is for non-bank financial institutions like mutual funds to be possibly designated as a SIFI by FSOC when they pose no risk to the economy if they get in trouble. Now, I think it's widely agreed between our discussions and here on the committee that we need reforms to the SIFI designation process that takes place over at FSOC. Now, I think we can agree that it's a good idea for business who is potentially going to be designated to SIFI to know why, and if in fact they are designated, to have an off-ramp such that they're able to make those adjustments. And the reason why this is so important, Mr. Secretary, for small savers and small asset managers in Maine is because if you have this burden of additional regulations that are really unnecessary and costly, it drives up the cost to provide their services and drives down the rate of return for someone saving for college, for example. So my question to you, Mr. Secretary, is can we agree that the best way to deal with this issue is to codify in legislation the reforms we need to the SIFI designation process?
We think that would be a good idea, and we believe in transparency, that, as you said, companies should understand if they are designated, why, and what they would need to do to get out.
Thank you, sir. Recently, your own Treasury Department issued an asset manager report that recommends completely eliminating stress testing for non-bank financial institutions like mutual funds and insurance companies. Now, in my opinion, I know we've had this discussion, sir, it doesn't make any sense for someone who's managing money for retirement to have the same stress test requirements or any stress test at all as a bank that is insuring deposits for maybe those same individuals. I'd like to bring to your attention, Mr. Mnuchin, if I can, my Bill H.R. 4566, Alleviating Stress Test Burdens to Help Investors Act. It passed this committee with wide bipartisan support. And I'm asking you, sir, do you agree with the Treasury's own report and with this committee that it's a good idea to eliminate these stress test requirements for non-bank financial institutions?
I do agree with, as we put it in the Treasurer's report, yes.
Thank you, sir. Last week, the Treasury produced a list of assets held by Russian oligarchs. Another bill that I have that has passed out of committee, sir, H.R. 1638, called the Iranian Leadership Asset Transparency Act, simply does, or roughly does, the same thing. In other words, it looks at the top 70 or 80 political and military leaders in Iran, which I may parenthetically say that we all know is the chief sponsor of terrorists in this world. They recruit, they train, and they fund these terrorists, and they have American blood on their hands. I think it's a great idea, as per my bill, to make sure we get the information out there to the public and to the world, how these folks have been ripping off their citizens, what they're using those assets for to shed sunlight on this issue. Now, Senator Cotton has also taken an interest in this bill, Mr. Mnuchin, and has introduced companion legislation on the other side of the chamber. Can we agree that this is a good idea to make sure the world knows what this money is being used for and how it was accumulated?
I'm not familiar with all the details of the bill, but I look forward to sitting down. But conceptually, I think it's the right direction.
Wonderful, because you're already doing it for folks over in Russia. Lastly, sir, if I may, the two reasons why the economy is doing so well is the great work in repealing red tape, and also the tax cuts have been recently enacted. In rural Maine, it is critically important that small community banks and credit unions are relieved from additional burdens in red tape. Can we get a commitment from you, sir, that you do everything humanly possible to help rural financial institutions?
Yes.
Thank you, sir. Appreciate it.
Time of the gentleman has expired. The chair now recognizes the gentleman from Texas, Mr. Green, ranking member of our Oversight and Investigations Subcommittee.
Thank you, Mr. Chairman. Thank you, Madam Ranking Member. And I thank the Secretary for appearing. Mr. Secretary, I fear that the grand old party, the party of Lincoln, Gettysburg Address, government of the people, by the people, for the people, shall not perish from the face of the earth. The party of Reagan, Mr. Gorbachev, tear down this wall. I fear that the grand old party has lost its way. I am amazed at the number of members of the grand old party who are defending Russian intrusion into a legitimate election for President of the United States of America. The party has lost its way. And I'm concerned about the sanctions that Congress legitimately desires to have imposed. I'm concerned as to whether they're being imposed, especially as it relates to Section 241, which accorded the Secretary of the Treasury, Secretary of State, Director of National Intelligence, to codify a list of these oligarchs, persons who have, by way of corruption, achieved great fortune. And this list was to be used so as to identify them and have certain restrictions imposed upon them. It has been reported that the list was compiled by the appropriate members of the government, the experts, if you will. But it's also been reported that after compilation took place, someone higher up decided that there was a better list that ought to be utilized. There is a suspicion that the person higher up resides in your office. Can you give clarification as to what's going on with the list, Mr. Secretary?
I don't know what you're implying in any way. So again, let me be perfectly clear, and I talked about this on the opening. There is again, we fully complied with the law. There is an extraordinary amount of work done. I encourage all of you who
Well,
have
Mr. Secretary,
access to
if
the
I may
classified
just intercede
report.
for just a moment, if I may. I don't mean to be rude, crude, and unrefined, but I do have to ask this. Is it true that there was a list presented and that list was changed in some way by persons other than those who had compiled the initial list?
Wasn't changed at all.
Was it added to?
Were there people added
Yes,
to the list?
to the list.
The list.
Were there people added to the list?
Again,
Were there people added to the list?
were there people,
Were there people added to the list?
the classified
Were
list?
there people added to the list?
By whom? By the intelligence people
Were
or
there
by us?
people added to the list by any source? You got news reports saying that somebody changed it and they're alleging that you are that person, Mr. Secretary. Were there people added to the list?
Again, let me be clear. I didn't add anybody to the
Were
list. I
there,
didn't
where you
take anybody
didn't,
to the
were
list.
there people added to the list? This is a very succinct, a very clear question. It is perspicuously clear. Were there people added to the list?
Again, let me be clear. I don't know what you're talking about.
I'm talking about the 241 list of oligarchs, people who, by corruption, obtained fortunes in Russia, people who are to be sanctioned, have sanctions
Yes,
imposed against them.
there are people that are on that list and that will be sanctioned.
Were there additional people added to the list? Here's the allegation, Mr. Secretary, that additional people were added to the list so as to expand the list and cause the oligarchs, the criminals, to be associated with persons who legitimately made money, thereby solidifying those who have fortunes in Russia with President Putin, thereby preventing what we wanted to see happen, that sanctions imposed against those who were achieving power and fame and recognition and money by virtue of corruption.
Again,
Were there people added to the list?
The time of the gentleman has expired. The chair
Let
now
the record
recognizes
reflect
the
I did
gentleman
not get
from
an answer.
Arkansas, Mr. Hill, the majority whip.
I thank the chairman. Thanks for this hearing, and thank you, Mr. Secretary, for coming before us today. And I want to say my appreciation to you in your first year working with both sides of the Hill on our historic Tax Cuts and Jobs Act. Just the other day, I got a message from a mom who told me that her withholding went down and her pay went up to the tune of $51.95 per pay period each month. And she connected it directly with paying for her daughter's biweekly health insurance premium. You know, that's exactly what I think the benefit of this tax plan is letting families have more of their money in their pocket to do what they need to do to help their family and to have their priorities met. And I got a note Friday afternoon from All Pro, which is a commercial painting contractor in Benton, Arkansas, in my district, that was so supportive of the act. Their plans are to buy new equipment and improve the compensation for all 27 of their employees. And then finally, I think that something that across Arkansas was very beneficial was 2 weeks ago the Public Service Commission announcing that for our shareholder-owned utilities, CenterPoint and Entergy, that the tax benefits that those utilities are getting by reducing the corporate tax rate will be passed through directly in lower utility bills for all Arkansans covered by them. And what a great way to say, here's a real benefit to your household that's not just seen directly, but indirectly from the tax bill. So thanks for your leadership. I'm sure it was a trial by fire as you left the private sector and came into Washington. So thank you. The other thing I wanted to talk about today from a regulatory point of view and FSOC's responsibility is the complexity since Dodd-Frank's imposition of the so-called Volcker Rule. We've had a lot of bipartisan discussion on that over the past years, and how can we deal with it? Chair Yellen described it as too complex to implement. Several bank presidents have come to this committee saying that it was too complex to implement. Our new Fed chair, just sworn in, Jay Powell, stated, I thought correctly, that trading desks needed Ouija boards to figure out how to comply with the Volcker Act. So I have a bill called H.R. 4790, which attempts to improve regulatory harmonization and coordination, something that you called for in the Treasury report, and also relieves banks under $10 billion from the complexity of the Volcker Rule. Is that something that you still personally support and would advocate for?
Absolutely. Thank you.
I want to remind my colleagues that the Federal Register, this is the Volcker Rule in the tiny print of the Federal Register. And all banks are trying to comply with this, Mr. Secretary, and it's just not doable. And when you have Federal Reserve Bank presidents in the country saying they can't even administer the rule to tell a bank if they're in compliance with it or not, we got a problem. So I appreciate your leadership, but it's an FSOC matter that we get that harmonization.
The other thing I want to mention, too, is on the subject of that my colleagues on the other side of the aisle are talking about, and give you a chance to respond. Clearly, you talked at length about sanctions on North Korea, Venezuela, and in Iran. I want to compliment you again on Treasury's work with both sides of the Hill to impose not only your economic sanctions you have control over at Treasury, but also working with the Hill on legislative sanctions here under Chairman Barr's leadership. Do you have a sense of timing on when you might follow through with proposed sanctions on the list of Russian inside oligarchs that has been so referenced by the other side today?
Sure. I can assure you that we have resources working on it right now, and it will be on a rolling basis over the next couple of months. And again, these same resources are working on, as you said, North Korea, Iran, and Venezuela. And there also have been significant Russian sanctions already done under our administration.
Well, this is something that I think we have strong bipartisan support on Capitol Hill, that we use the economic power of the Treasury, our trade strength as the United States, and our bipartisan ability to have legislative sanctions against countries and non-state actors that try to hurt this country. So thanks for your leadership on the national security front. I yield back, Mr. Chairman.
Time of the gentleman has expired. The chair now recognizes the gentleman from Illinois, Mr. Foster.
And thank you, Mr. Chairman. Let's say, during the Obama recovery, the stock market tripled, household net worth nearly doubled, unemployment was cut in half, trade deficits were reduced, and inflation was kept low. Do you expect that your administration will match the Obama record, and if not, why not?
Again, obviously, when we were coming out of one of the worst recessions, we had those numbers move in specific directions. So we're now more focused on sustained GDP growth, which was subpar in the last administration.
But you don't expect, for example, that you will do as well in tripling the stock market or similar, or cutting unemployment?
Again, I'm not going to make any specific comments about where the stock market is in the future. It's been up a lot. Again, but I'm not going to make any specific comments on the stock market.
Okay. Now, I'd like to talk a little bit about trade and Forex markets. I've long viewed that the failure of free trade deals to address currency manipulation was probably their most significant shortcoming and the major reason I haven't supported them. Nations, can and have devalued their currencies opposite the dollar so that even the benefits of reduced tariffs, which typically come from trade deals, and other trade barriers are significantly undermined. One of the duties you have is to periodically designate countries that potentially for currency manipulation, and I think largely because the dollar has been significantly down in the last year, you have not designated any countries as currency manipulators using the objective three-part test that was developed. And so I think that is correct. However, there's a real danger that particularly if things go sour in Asia, for example, they may resume currency manipulation. And so we have to be prepared to have action. And so the question is, what action can we take with and without treaty-level agreements? So one proposal that I've studied that does not require, it's something that any treaty-level agreements, things that we could just do ourselves, comes from Fred Bergsten and Joseph Gagnon at the Peterson Institute. They argue the United States could act unilaterally or multilaterally, if possible, with a partner like the EU or the ECB to simply make countervailing purchases of currency for any country that was found to be manipulating its currency, according to either our definition or the IMF's definition, which are pretty similar. And so I was just wondering if you had time to think about this. I raised this issue previously when you were here. And it seems like even announcing a policy that this was a national policy to do this on a unilateral basis would really, basically solve this problem. It's not something that we have to actually, get an international agreement to do. And I was wondering if you have any thoughts or on how you might proceed on this.
Sure. Well, first of all, I can assure you that the President and I are very focused on the trade deficits and are very focused on currency manipulation. And to the extent there is currency manipulation going forward, we will absolutely call that out. Okay, we have it
But
on.
we've been
the
calling
watch
it out
list.
for decades, all right? Calling it out, jawboning doesn't work.
Well,
So that
again,
was-
I think sometimes in the past we didn't call it out, so that was one of the problems. But in any event, we look forward to working with you. I think your idea is an interesting idea. It's one of the many tools that we can use against currency manipulators.
All right, yeah, no, I think this is, actually, it really comes from the Peterson Institute, the thought behind it. And when I saw this, I just thought this is something we can and should do.
I think it's very interesting. Thank you.
Okay. Let's see. I'd like to speak a little bit about the debt limit. When we talked about this last time you were here, you really said that you did not support the debt limit as a mechanism for controlling spending, which is something, I agree. However, and the market has learned to tolerate things like government shutdown pretty, by rolling their eyes and not reacting too strongly. But the reaction to a default, a potential default, has been huge. During the Tea Party default crisis in 2011, we saw just, multi-trillion dollars of losses in market value. I think the average American lost more than $10,000 due to the Tea Party default crisis. And so this I view as a completely separate and separate risk and very important one that we're, staring down the barrel of. And so I was just wondering if you've had any thoughts on things like proposals to permanently get rid of the debt limit, in combination with other mechanisms to control spending?
I have. I've talked to the president about that, and I think that that's something that we should consider longer term.
Time of the gentleman has expired. The chair now recognizes the gentleman from Minnesota, Mr. Emmer.
Thank you, Mr. Chairman, and thank you, Mr. Secretary, for being here today. It's interesting. I want to go back. Just a second ago, you said our focus has been more addressing GDP growth as one thing that you brought up. I find it interesting because the last administration on the way out the door was boasting 1.8% GDP growth somewhere around December of the year they were leaving office. It's completely different over the past year. Not only is GDP gone over 3%, but since Election Day, you've got the lowest level of unemployment in 17 years. Wages are finally rising after 8 years of stagnation. In fact, 2.9% over the past 12 months is the largest since June of 2009. And it doesn't even account for the bonuses that are due to tax reform. Small businesses plan to increase compensation to the highest level in nearly 30 years, according to the NFIB. Pay gains during Trump's first year in office are the best since the Great Recession. More companies are hiking wages and salaries than at any time over the last 18 years, according to the National Association for Business Economics. U.S. manufacturing expands near the fastest pace in more than 13 years, according to the Institute for Supply Management. And U.S. jobless claims are nearing a 45-year low, according to our Labor Department. Back in Minnesota, on January 2nd, U.S. Bancorp, which is based in Minnesota, announced a $1,000 bonus for nearly 60,000 employees, a new minimum wage of $15 per hour for all hourly employees, and a $150 million contribution to the U.S. Bank Foundation, which is heavily involved in our communities. The company also said it would enhance employee health insurance offerings as well as focus on improving customers' mobile and digital experiences. This is in great part due to the Tax and Jobs Act, which you deserve to be thanked over and over for the leadership that you showed, Mr. Secretary, in making sure that thing got done. And we appreciate it. Now, this is just one of the success stories that we have in Minnesota, but we're not out of the woods yet. And I think you would agree we have a lot of work left to do. We've just begun. You've touched on it here today, the FSOC's 2017 report with some other questions, but I want to go at this quote from your report on the importance of tailoring regulations based on the size and complexity of financial institutions. To me, it's inane that we just pick a number
whether it's 50 billion or if it's 250 billion, whatever it is, when what we should be doing is looking at the institution, looking at their portfolio, what are they doing to assess whether they pose risk to our system. And I guess if you would just take a little bit of time and explain the problems that we encounter, not just the institutions, by failing to tailor these evaluations to the institution. How does that not only impact the institution's ability to do business all the way down the financial services food chain, but how does it impact the consumer, the mom and pop small businesses?
Well, again, as you point out, just to start with on size, a $50 billion bank and a $1 trillion bank have very different risks. But you could have two banks that are the same size, and one could be a plain vanilla bank that does community lending, and the other one could be a complex bank with lots of derivatives. So we believe in looking at the complexity of the organization and the risks.
Mr. Secretary, would you support, and there have been efforts in this committee, and things have actually been moved out of committee, would you support trying to codify or legislate actual adjustments to how we evaluate, how you evaluate financial institutions? In other words, putting into law rules that would allow that type of evaluation as opposed to an arbitrary threshold.
Right. I would, and I look forward to working with you on it.
Thank you very much. I see, Mr. Chair, my time has run out. I'll yield back.
Gentleman yields back. Chair now recognizes the gentleman from Washington, Mr. Heck.
Thank you, Mr. Chairman. Mr. Secretary, when you were here in July, I asked if you would please extend your efforts and that of your departments in working with myself and Congressman Pittenger on our efforts to modernize the Committee on Foreign Investment in the U.S. CFIUS. You have. You've done so. Not only done so, you've done so constructively, and I want to publicly acknowledge that and thank you very much for following through on your word. Now, a key part of making sure that CFIUS keeps us safe and functions efficiently is ensuring that it's appropriately resourced, that you all have the money to do what you need to do. The results of our collaboration, codenamed FIRMA, have provisions in it that help with resources. For example, it creates a unified budget request, grants special hiring authority, and grants authority for filing fees. But you also, personally, as Secretary of the Treasury, have an important role to play in this regard. So I'd like to ask you, sir, if you can and are willing to give us a commitment that you will do everything you can, working within Treasury and the administration and in partnership with the Congress, to make sure that CFIUS has the necessary resources to do its job, especially if we enact CFIUS modernization legislation.
I will, and I'm hopeful that we get this passed soon. It's a big priority of ours at Treasury working with you.
And you've demonstrated that. Again, thank you. Also, when you testified last July, you identified joint ventures as a particularly concerning gap in existing CFIUS authorities. I'd like to ask if you could elaborate on why Treasury believes it's particularly important for any CFIUS modernization to cover joint ventures?
Sure, because we think that where there are risks that would be done in a purchase, to the extent that a company is able to structure a joint venture to get around the current CFIUS legislation, that defeats the intent of the law, and that's why we've been working with you on FIRMA to fix it.
How do you see expanded CFIUS authorities, especially with respect to joint ventures, interacting with existing areas of the law? Obviously, I'm referring to export controls. You believe these can be integrated and work?
Yes.
I want to go back to something that you said earlier in response to the question about FinCEN guidance on access to banking services for marijuana businesses in states that have legally constituted them, either through approval of legislative action or by a vote of the people, which is now a majority of states. And what you said, Mr. Secretary, is, I'm quoting you verbatim from just a couple hours ago, I can assure you we don't want bags of cash. I can conceive of no way in which you can avoid bags of cash if you back down on FinCEN guidance? Do you have something in mind that would enable us to prevent that very perilous circumstance to public safety of having bags of cash through a route other than that which FinCEN has already offered in terms of guidance?
Sure. Well, as I mentioned, we are reviewing the existing guidance. We specifically haven't taken it down. We are looking at what Justice has done. And again, as I said, we're sensitive to the issue of dealing with the public safety issue and also making sure that the IRS and others have ways of collecting taxes without taking in cash.
I'm interpreting what you just said to effectively, implicitly, being supportive of the current FinCEN guidance. Would I be off in that regard?
Again, I want to be careful in my wording and saying we are reviewing it, but the intent is not to take it down without a replacement that can deal with the current situation.
Very good, sir. Lastly, I cannot help but comment on this issue of Russian sanctions. Mr. Secretary, we will know when sanctions are working when Russia stops interfering in Western democracies' elections. We know they did in ours in 2016. We know they did in other Western democracies. Since then, Germany, France, as but two examples. And we know they are, as we sit and speak, in the Mexican national election, as attested to by none other than the National Security Advisor to the President. So as you proceed to be a party to these conversations about whether or not to actually carry through on the sanctions that Congress adopted 517 to 5, please keep in mind they haven't stopped. They're not going to unless or until we actually do what Congress asked the administration to do.
Time of the gentleman has expired. The chair now recognizes the gentleman from Michigan, Mr. Trott.
Thank you, Mr. Chairman. Thank you, Mr. Secretary, for your time today. The chairman mentioned earlier the $1,000 bonuses that Comerica Bank gave to their employees down in Dallas. Before they moved to Dallas, they were headquartered in Detroit, and they still have thousands of employees in Detroit. And in fact, we hope that they move their headquarters back to Detroit. A lot of exciting things happening there.
Would the gentleman yield on that point?
The gentleman will yield.
I was being facetious. As the member from Dallas, we're very happy where Comerica is located.
But we still have thousands of people in Michigan at Comerica. But I want to thank you because the tax reform legislation that you helped get through Congress prompted Fiat Chrysler to make a very important decision, headquartered in my district. They decided to invest $1 billion in Michigan, create 2,500 jobs, give each employee $2,000 a bonus, and move a plant from Mexico back to Michigan. So that's going to make a huge difference for people in my district, and I thank you for your efforts in that regard. Now, a few minutes ago, my friend from Georgia asked if you had heard about the CFPB's decision not to pursue and investigate Equifax. And in other breaking news involving the CFPB, the D.C. Circuit a few days ago decided en banc to throw out all of the penalties and fines that were imposed against PHH, over $100 million, by the prior czar, who was acting in an arbitrary fashion when he decided to ignore RESPA and statute of limitation laws. But with respect to Equifax, is it possible that the CFPB decided not to investigate Equifax because they're not authorized to? Then under Graham-Leach-Bliley and the Fair Credit Reporting Act, isn't that responsibility entrusted to the FTC, not the CFPB?
Again, I'm not going to speculate on that until I've had a chance to talk to Director Mulvaney about his thinking on it.
Okay, well, I don't think they have the authority, so that's perhaps why they made the decision. But in any event, I want to congratulate you on a very productive first year. It's making an incredible difference to our economy, and it's clear your background and experience has made you well qualified to do the work you're doing. With that being said, your annual report did not call for the repeal of the Orderly Liquidation Authority. And as a former bankruptcy attorney, I happen to believe that a new subchapter in the bankruptcy code is a much better way to deal with an insolvent financial institution than political appointed bureaucrats sitting in secret in a private room. You know, you go to bankruptcy court, you've got an experienced judge who's going to make a decision based on years of precedent. It's going to be open and transparent. And so I'd just like your thoughts on whether the repeal of OLA and replacing it with a bankruptcy solution is a better outcome in the event we have a financial institution with some troubles down the road.
So I think, as you know, one of the executive orders that the President signed was for us to review that, and we expect we will be coming out within the next month on our report and our recommendations. So once we do that, I look forward to talking to you about it.
Well, thank you. And one of the problems I had with FSOC under the prior administration is it seemed to be largely motivated by a guiding principle that was basically, to put it succinctly, that all business is bad, and if you're a bank making a profit, then you must be in need of additional regulation and or must be taking advantage of consumers, and therefore we're going to empower bureaucrats to write rules because the government is so much better at solving problems in the private sector than entrepreneurs. Can you just briefly outline some of the reforms you're making to make sure that corporations have a fair shake at FSOC going forward?
Sure. Well, in general, I've met with literally hundreds and hundreds of CEOs. Specifically, we do believe in proper regulation, but we are being very clear that we want to make sure that the banks and other regulated entities do function properly.
Thank you, Mr. Secretary. I want to just close by mentioning my friend from Colorado, Mr. Tipton, has a great bill, the Taylor Act, which is aimed at making sure regulations are tailored to specific businesses and not a one-size-fits-all. With that, I'll yield back my time to the chair.
I thank the gentleman for yielding. Mr. Secretary, I want to go back and revisit the Volcker rule. I just want to make sure I understand your views regarding coordination and harmonization of the various agencies. Would you advocate that a single regulator take the lead on rule writing and interpretation of Volcker as long as the other regulators continue to have a role in the examination process?
Yes, thank you, Mr. Chairman, for clarifying that. So I would support there being a lead agency. Some people have suggested that be the Fed, and then have the other agencies play a supporting role so that there could be better coordination and better leadership on it.
Thank you, Mr. Secretary. Time of the gentleman from Michigan has now expired. Chair recognizes the gentleman from Massachusetts, Mr. Lynch.
Thank you, Mr. Chairman. Thank you, Mr. Secretary, for your indulgence and with the generosity of your time here today. I know you've been here quite a while. Mr. Secretary, I was just curious. I know that the current administration has level funding the amount of resources for the Financial Crimes Enforcement Network, FinCEN. They do a lot of great work with this committee, especially with our anti-terrorism financing subcommittee. And there is one weakness, one vulnerability that we did encounter on our investigation of some of the countries' financial systems in the Middle East, and that is that we have on occasion one Treasury attaché out of your department covering 5 or 6 countries, and obviously countries in that area, in that region, that present some level of substantial risk. And I'm just wondering if you would be willing to look at the possibility of increasing our people on the ground to work with our embassy personnel to help with the resiliency efforts that we have in a number of the Middle Eastern countries where we suspect that terrorist financing and illicit financing are intertwined with the legitimate financial systems and the banking systems in those countries.
I would, and I agree with you. In my trip to the Middle East last summer and in other conversations, the Treasury attachés on the ground play a terrific role working with the local governments and the local banks on combating terrorist financing.
Well, you get some very, very good people there that are doing a wonderful job. My concern, and those of my colleagues on the other side of the aisle, as well as Democrats, was that they're stretched pretty thin, and that we think that the result of being stretched thin like that will reduce the efficacy of our counterterrorism financing efforts. One subject that's been a lively subject of debate in this committee is the Export-Import Bank. And I know that the President, when he ran for office, he talked about bringing jobs home and supporting manufacturing. one of the most effective tools we have in government in creating manufacturing jobs here in the United States has been our Export-Import Bank. And we're up against other countries that are expending tremendous resources to give their companies a competitive advantage. Recently, the President nominated someone with a long record of working to hobble and to actually shut down the Export-Import Bank. And I'd just like to find out what your approach might be, or what your attitudes might be towards the Export-Import Bank's efforts to promote U.S. competitiveness, especially in the manufacturing sector.
Well, I'm indirectly involved in this, but I have spoken to the President and others, and he does want to open the Export-Import Bank for business. I think we want to make sure that there are proper reforms there, but we are looking to fill the board.
Okay. Let me jump to this other matter with the MetLife de-designation suit. I understand that you've dropped the appeal of the MetLife de-designation suit, and I'm just curious if you think that dropping that suit might make any future designation vulnerable to a similar legal challenge.
Well, again, I think we looked at this purely from a legal standpoint, and we decided to drop the appeal. MetLife could still be subject to designation in the future or not. So the decision was made on a legal basis around certain issues.
But I guess what I'm asking is are we satisfied with the precedent that we might be setting in dropping that appeal?
I think we are. We consulted with the Department of Justice and with the other agencies, and I think we're comfortable with that.
Thank you. Mr. Chairman, I yield back.
Gentleman yields back. The chair now recognizes the gentleman from California, Mr. Royce, Chairman of the House Foreign Affairs Committee.
Thank you very much, Mr. Chairman. This question, Secretary Mnuchin, this question goes to de-risking the federal balance sheet, and specifically, we discussed this the last time that you and I spoke before you, when you were before the committee, and also in conjunction with GSE reform. But I'll lay out the case here. Earlier this Congress, I introduced legislation requiring that the GSEs increase credit risk transfers with the private sector. And I'm hopeful that the bill will be included in the committee's comprehensive reform efforts. So we have seen credit risk transfers work, not just at Fannie and Freddie, but following last year's storm season. If we think about it, we saw a private reinsurance payout afterwards of $1 billion to the National Flood Insurance Program. So analysis has shown that there is far more capacity in the financial system worldwide, about $600 billion, for increased credit risk transfer. So my thought here is, why not look elsewhere in the federal government? On the housing front, why not replicate risk transfer at FHA and at Ginnie Mae specifically? And I would ask if you would support those efforts.
Well, first of all, let me just say I look forward to working with you and the chairman and others on a bipartisan basis for housing reform. I think this is very important. And I do say housing reform because I do think we need to look at FHA and not just the GSEs. I want to be very careful that we don't solve the taxpayer issue in one area only to find out that the market share at FHA has gone way up and we have taxpayers at risk on the Fed balance sheet.
Absolutely. So what I plan to do is to introduce legislation to direct the Office of Management and Budget to identify other areas of the federal balance sheet where de-risking could be used to protect taxpayers, and I hope you could support that effort. Also on export control reform, a point I was going to make is that as we discuss our economic security here moving forward, I share the concern of my colleagues that foreign government-backed investments that's critical, that we look at those investments in U.S. technologies that might pose a national security risk. And as you mentioned in your opening, the committee is considering legislation to expand CFIUS in a way to address this threat. The Foreign Affairs Committee, which I chair, is considering export control reform as an additional way to tackle the problem. So would you support new authorities to restrict the export of critical technologies to countries that threaten U.S. national security?
I absolutely would. Thank you.
Well, thank you. With that, I'll yield back, Mr. Chairman.
Do you yield to the chairman?
I yield my time to the chairman.
I thank the gentleman for yielding. I want to go back to the FSOC designation process, Mr. Secretary, just to make sure I'm clear. In the previous administration, FSOC seemed to make their designation without taking in the input of the institution's primary regulator, because we know the FSOC membership is not really an agency, it is a head of an agency. And we certainly know that under the previous administration, there was little to no interaction with the actual company that was the subject of the designation review. As head of FSOC, how has your process changed? Will the primary regulator be involved in this process? And what exactly is the dialogue or process that will take place with the company that is subject to a potential designation?
First of all, we absolutely will look to and rely upon information for the primary regulator. They're the regulator that understands the company the best. And as I mentioned earlier, we're looking to revise the guidelines so that there's more transparency when we designate someone.
Could you go into more detail about that, Mr. Secretary, on your transparency initiative?
Yeah, I mean, I fundamentally believe that if people are designated, they should understand why they're being designated and what they can do to reduce those risks going forward.
Thank you. The chair now recognizes the gentleman from Colorado, Mr. Perlmutter.
Thanks for being here, Mr. Secretary. And I've got 3 areas I want to talk to you about.
Thank you.
Bitcoin, virtual currencies, marijuana and banking, and sanctions.
All 3 of my favorites.
I thought you would enjoy those. So, and really, we do appreciate your testimony today. You've been going a long time. So let's just start with the virtual currencies. And we've seen tremendous fluctuation in the market, particularly over the last year. You know, where it reached some 19,000 Bitcoin, for instance, in mid-December. It's down around 6,000 or so today. What steps is Treasury, how are you looking at these virtual currencies, and what do you think needs to be done, if anything?
Well, I share your concerns on it, and as I mentioned earlier, there's 2 major focus. So one, we've set up a subcommittee of FSOC to make sure that we have the various different regulators working together, since these are new areas. Number 1, I want to make sure that anybody who uses Bitcoins, that we can understand how they're transacting, so that they're subject to BSA rules, they're subject to money laundering, they're subject to know your customer. So in the United States, we have those rules. We're working with our counterparts at the G20. I want to be careful that this doesn't turn into Swiss-numbered bank accounts. So bad guys can't use these. The second thing is I do share your concern about making sure that consumers understand them, and to the extent that they're now trading on futures exchanges, that the futures exchanges have the proper regulation of the underlying markets so that they can't be manipulated.
Okay, thank you. Second question, marijuana and banking. And when you were here last, you and I had a little conversation, and obviously we see this industry growing. We're up to 46 states that have some level of marijuana use, so whether it's cannabis oil for seizures or medical marijuana or commercial. And, you know, the chairman and I joust about this from time to time, but obviously the banking industry needs to provide some services to all these businesses across all these states. And I don't know if you were surprised by the revocation of the Cole memo by the Justice Department, or whether you'd had chances to talk to the Attorney General before that occurred, but the genie is out of the bottle on this, and Treasury and Justice and the Congress need to address this. So you said you were going to talk to your friend, Mr. Mulvaney, about some CFPB issue or maybe budget or whatever. I suggest to you that you talk to him about the SAFE Act that Mr. Heck and I are sponsoring, because he was a co-sponsor of it. And we hoped he would have been the main sponsor, but for the fact he was selected to go to the administration. So, obviously, in response to Mr. Heck, you guys are reviewing your FinCEN guidances and things like that, but there is no kind of going back here. And your department is square in the middle of so many banks and so many businesses either having a safe way and an accountable way to manage this. Just if you have any comments to my comments.
Well, yes, first of all, I will follow up with Director Mulvaney on the SAFE Act specifically. I did not participate in the Attorney General's decision and what he did, but we are consulting with them now. And again, we do want to find a solution to make sure that businesses that have large access to cash have a way to get them into a depository institution for it to be safe.
Thank you. Last question, sanctions, which you've had an opportunity to address a few times already today. But just looking at a story from Bloomberg from a couple days ago, Treasury warns of upheaval if U.S. sanctions Russian debt. And my guess is you're familiar with it. But there's a sentence in here: Russian assets climbed this week as investors speculated the Treasury wouldn't recommend sanctions on the country's sovereign debt. And then further, from a report, it says, given the size of Russia's economy, its interconnectedness, and prevalence in global asset markets, it's likely overcompliance by global firms to U.S. sanctions. The magnitude and scope of consequences from expanding sanctions would be problematic. Your response?
I think we're targeted on specific sanctions to bad individuals and companies as opposed to sanctions on the debt.
Time of the gentleman has expired. The chair now recognizes the gentleman from Georgia, Mr. Loudermilk.
Thank you, Mr. Chairman, and Mr. Secretary, good to see you again, and thank you for all you're doing. And before I get to my questions regarding regulatory review, I want to just share with you a little bit of good news. We keep hearing all this bad news, but 2 years ago, when I went home one weekend, it was at several events, a gentleman came up to me and he shared with me a story that he did not feel like he could continue on running their small manufacturing business that had been in their family for decades. In fact, he told me it was so difficult to do business between regulation, lack of access to capital, customers. It wasn't just him, but even his customers putting pressure on him because of their costs going up. He said, after decades of running this small business, I'm going to retire and I'm going to shut this business down. And my children don't even want to be in the business because it's so difficult to do business. This weekend, I ran into that same gentleman who came up to me with a big smile on his face. He said, I just want to tell you, my accountant came to me last week and said, next year, because of the tax reform bill, you are going to save $100,000 in this business. He said, no longer am I shutting it down. I'm trying to figure out the best way to expand the business right now. So that is a true Main Street story of what
Thank you. We like those stories.
Oh, I do too. And hey, I'll tell you, it's a whole lot better to go home and hear thank you. Thank you for what you've done, and we're hearing it all over. I wanted to discuss an issue that you raised in the Treasury report on banks and credit unions. You discussed the importance of retrospective reviews of agencies' regulations, which many in this room on a bipartisan basis believe we should have regular reviews of regulations, especially those that are antiquated, outdated, or irrelevant. And in the report, you also noted that before Dodd-Frank, The banking agencies themselves were responsible for implementing consumer financial protection laws, so these regulations were included in reviews under Economic Growth and Regulatory Paperwork Act. However, when Dodd-Frank created the CFPB, consumer regulations were no longer subject to these reviews. Now, just in the last few weeks, we passed a bill out of this committee on a bipartisan basis that I authored that would actually include CFPB in the Agrippa review process. And my question is, can you explain or further explain why it's important for these regulatory agencies to review their rules periodically?
Again, I think it's very important. I think that rules and regulations are very important, but on the other hand, they need to be constantly looked at as markets change and make sure that we don't over-regulate to the extent we can't have growth.
So being that the changes in Dodd-Frank basically exempted CFPB from reviewing their own regulations, you support the idea of returning CFPB just to do the basic reviews?
I do completely. I'm not sure why they were exempted, so I agree with the change.
And as I said, we've got strong bipartisan support for this bill, so I hope that we'll see that when it comes to the floor. And we changed a little bit of the time frame. Instead of 10 years to 7 years, I think, as things change, that will help American consumers by having more frequent reviews. The other area that's very important to me is cybersecurity. That's been brought up a few times. I worked in the cybersecurity arena before coming to Congress. I had an IT services company for many years, and I also worked in the intelligence community back in the military, which in both instances we were tasked with protecting data. And one of the principles we worked off of is you don't have to protect what you don't have. What that means is if you don't need information, don't keep the information. Otherwise, you become a risk. And from what I've seen is that quite often the federal government, through its regulatory agencies, puts onerous requirements on businesses to not only keep data that they normally would not keep or they don't need to keep, but also report it to the federal government, which we have seen as our own federal government is by far a higher security risk than a lot of businesses. Do you agree with those principles and ideas that we should have a stringent review on what data we're requiring businesses not only to keep but to report?
Absolutely.
All right. Thank you. Mr. Chairman, we'll yield the remainder of my time.
I thank the gentleman for yielding. Mr. Secretary, CCAR and DFAST, are you convinced that they are doing us more good than harm, or do you worry that this regulation may end up being a little too heavy-handed in its current form?
I think it's a very complicated regulation, and I think it could use some reform and clarity.
I appreciate that. 6 seconds left. I yield back the time. The chair now recognizes the gentlelady from Ohio, Ms. Beatty.
Thank you, Mr. Chairman and Ranking Member, and thank you, Secretary Mnuchin, for being here. We've asked you a lot of questions about regulatory issues in the Treasury that range from cybersecurity to terrorist financing to FSOC and its financial risk, and the list goes on and on. But I'm going to shift to the people part of it. But I'm going to start by first referencing from your testimony today about on line 3 of the first page. You used the word sustain economic growth. And on page 4, about 3 lines from the bottom, you have stated there is much more work for us to do. Our country's potential is enormous, which is why Americans expect their government to enact policies that allow them to succeed and prosper. I agree with that. Our ranking member has allowed me to sit second chair on OMWE. And so when you were here before, the time ran out, so I submitted in writing my request to you, and that was almost a year ago, asking you at that time if you had met with your director of OMWE. I'm appreciative of a response, even though I just got it on Friday after about 7 months, so I assume some good staff person got it to you to prepare you for today. So I will now ask you today, have you met with your OMNI director, or do you know who your OMNI director is?
Well, first of all, again, let me just say the responses to the questions took way too long, and we apologize to the committee. As it relates to the Omni, I am planning on meeting with them.
So is that no and no? No, you don't know who the Omni director is, and no, you have not met with the Omni director. And while you're conferring, let me just read to you, Mr. Secretary, that Section 342B3 of the Dodd-Frank Act mandates that each Omni director is to advise the agency administrator for the U.S. Treasury, that would be you, on the impact of the policies and regulations of the agency on minority-owned and women-owned businesses, and that under Section 342G2 of the Dodd-Frank Act, it defines you as the agency administrator. So maybe that helps refresh your memory. Can you want to have to?
I'm going to have to follow up with my staff on that and get.
So that means you don't know who the person is and you've not met with the person?
I don't know who.
I just need a yes or no.
I don't know who the person is right now off the top of my head, and I want to confirm with my staff.
So that would make you in violation of a direct law of something that you're supposed to be doing. I don't want to belabor this, but Mr. Secretary, I want to let you know this is not only important to me, this is something that's mandated and required. And when we talk about, in your words, of enacting policies that allow people to succeed and prosper, it is my belief that we have this in Dodd-Frank because there have been people like you and others who have not been proponents of OMWI, who've not followed through, so thus we put it in law. This is something that I've asked every person that has sat in that chair that is required to follow Section 342. So can you tell me how soon you're going to make this happen? Because there's no need in me asking you.
I'm going to get back to you tomorrow.
Okay.
You have my commitment on that.
Okay, I appreciate that. Let me move to my second question, which relates to GSEs and affordable housing. In this committee and on the subcommittee, as you know, there's a subcommittee on housing and insurance. We've held several hearings on the future of our housing finance. In your opinion, what role should the future reforms in housing finance play with regard to housing and affordable housing? You made some reference in your testimony about Fannie Mae and Freddie and being in conservatorship. So what are some of your reforms?
Well, again, I start with the premise that on the one extreme, I believe that the 30-year mortgage is very important to the economy and the liquidity of housing. And on the other hand, we want to have the taxpayers properly protected. So I believe the current situation is not sustainable. I also believe that affordable housing is something that is important, and whether there are direct or indirect goals and how it is paid for is something that we need to address as part of housing reform.
Time of the gentlelady has expired. The chair now recognizes the gentleman from Ohio, Mr. Davidson.
Thank you, Mr. Chairman. Thank you, Mr. Secretary, and thank you on behalf of Ohio's 8th Congressional District for your critical role in helping us pass the Tax Cut and Jobs Act. I've heard story after story about the difference it's making in the lives of hardworking families and innovative companies in Ohio. One such story was highlighted during the President's State of the Union with Staub Manufacturing Solutions. Steve Staub, a friend of mine, his sister, and one of their employees, Corey the welder, were here talking about their expansion plans. And one of the lesser-known provisions, I was just talking to the owner of a CNC business, very competitive niche, a lot of automation there, talking about how much automation is moving their industry. And he was concerned about his ability to keep up with the investment required to stay competitive, and did not understand that we had moved past Section 179 expensing to get full and immediate expensing. So he was very excited, was planning to go meet with his accountant to talk about how he could ramp up that investment plan. That's going to continue to make a difference for companies in our district, and just thank you on behalf of the people of Ohio's 8th District. But I also want to highlight the other good things going on in our economy related to regulatory reform. There are a number of folks that have talked about that, and it would be great to get your support with the Senate getting action on our reforms to Dodd-Frank with the Choice Act. So any thoughts on what we can do to advance the cause there with our Senate colleagues?
I'm cautiously optimistic that the chairman and Senator Crapo and others are going to figure out how we can get this done.
Thank you for that. And the cybersecurity realm, there are a number of concerns. They've been highlighted by breaches at the SEC, disclosed, unfortunately, well after the breaches occurred, and a lot of data that's vulnerable in our financial markets. We've got the consolidated audit trail that is critical for trading irregularities off of algorithms and due to be launched without a CISO. Do you have specific plans to try to coordinate all the functional areas that you provide oversight over to kind of address cybersecurity in this era?
We do.
How is that taking shape within the Department of Treasury? Is it specific to each subset, or is there some macro level coordination?
Well, within Treasury and all of our specific bureaus, we have common guidelines. So the OCC, the IRS would be picked up on that. As it relates to the other independent agencies, we are coordinating with them to make sure that they are following the administration's priorities on cybersecurity.
Thank you. Do you see any need for Congress to pass legislation to allow government agencies such as SEC, CFTC, FHFA, to oversee third-party service providers, particularly information technology service providers? Is there a gap in the regulatory framework to hold folks accountable? And I bring this up because of the consolidated audit trail and the work Thesis has done there. It's taken a long time to get to implementation. There are some remaining cybersecurity concerns, including what is the code written to? How do the people that need to interface with the system? And there's still no CISO in place. Is there a regulatory approach, or is that something that you feel is firmly able to be done by the department?
I think it should be able to, but we look forward to, I'll follow up with you and your staff, because I share your concern on it.
Thank you. And then going back to the economy, we've seen great investment. We've seen the markets respond over the course of the year dramatically to regulatory reforms, to the expectation of tax reform, and now the occurrence of tax reform. It's not like President Obama's friends like Tim Cook somehow forgot to make these big investments during the Obama economy. They're making the investments now because it's a fact. These things are going dramatically upward. So while there was a trend of stagnant growth and stagnant wages, the trend now is towards dramatically increased growth and finally some traction on wages. How do you feel about the outlook ahead for that trend?
I think it's quite positive.
Thank you. And then I think the last thing I would ask is, do you consider China a market economy or not?
No, I do not.
Thank you. Mr. Chairman, I yield.
Time of the gentleman has expired. The chair wishes to inform members that the chair expects to clear 2 more members, Mr. Kuhn and Mr. Kustoff, and then release the witness. Gentleman from Nevada, Mr. Kuhn, is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you, Ranking Member. And thank you, Mr. Secretary, for being here this afternoon. As you might know, I represent the 4th Congressional District of Nevada, which is North Las Vegas, which was the epicenter of the foreclosure crisis during the recession, where over 60,000 people all across the country lost their home to foreclosure, including 3,600 in the state of Nevada. Now, I know that you ran One West when the bank was aggressively foreclosing on homeowners, including thousands of seniors in the state of Nevada. Now, as Secretary of Treasury, you are a key voice in the administration's position on housing finance reform. Now, how can we trust you to support responsible reforms that will hold lenders accountable when you yourself were responsible for abusing the system when you led One West?
Again, I think I've talked about this in the past, but let me just again state, I didn't originate any of those loans. Those loans were inherited. When you say we aggressively foreclosed, we were required to follow FDIC agreements and HAMP modifications. And I think I have a great understanding of the issues that all those homeowners went through, and we're proud of the fact that loan modifications started under the FDIC at IndyMac, and we helped expand that.
Well, sir, there's a reason why you were dubbed the foreclosure king, and there's a reason why you've made millions of dollars, quite frankly, on the backs of my constituents who are losing their home, and so that is why you've mentioned, you've talked about this in the past, but not in this committee, not with me being here, and so it is my responsibility to speak on behalf of my constituents. Now, there was a specific example, a 90-year-old woman who claimed that Financial Freedom initiated foreclosure when she came up just 27 cents short on insurance payment due to confusion about how much she owed. Now, can you explain why it would make sense for a bank to initiate foreclosure proceedings against a person who just owed 27 cents?
It made no sense, and that's actually why we wrote HUD and tried to have those laws changed. So again, that was a HUD loan that we were required to do, and we actually asked HUD to raise the limits up to several $1,000s. It made no sense. In many cases, we appealed to them for exemptions. It was a very difficult situation.
And Mr. Secretary, specifically, what reforms do you think Congress should consider to ensure that households facing foreclosures are never again subject to the kind of predatory behavior that One West engaged in?
Well, again, One West did not originate those loans. I think the most important thing is that banks originate loans that borrowers can afford and underwrite them properly, and that was the biggest problem with the housing crisis.
I'll give the rest of my time to the ranking member.
Thank you very much. I appreciate that, but I'm going to yield the time that you're giving to me to Mr. Ellison, if that's okay with you.
I'll thank the gentlelady. You know, with my 1 minute and 37 seconds, I will just acknowledge that I've seen you and some of my colleagues congratulate each other on this tax bill. You've been invoking small business people, baristas. You've been invoking bank tellers, regular folks like that. But I noticed that you didn't mention the hedge fund managers and the private equity folks, or even the president, and the tax benefits that perhaps one Secretary of the Treasury might benefit. Have you calculated your own personal benefit from this recent tax bill?
I don't think I get much benefit at all. I think, as you know, I was required to sell almost all my investments in coming into this job.
Well, you know, it's funny because you were asked by Jake Tapper about this question, and he asked you, you know, who's going to benefit, and you said the rich will not benefit. In fact, you said, quote, in high tax states, actually rich people's taxes will be going up. Well, what we know now is that by 2027, 9 of 10 members of the wealthiest 1% in every state will see their taxes go down. Are you prepared to amend your claim that the taxes for the rich were going to go up?
No, I was commenting on what it was now, and again, we hope that those situations in 2027,
you know, let me just reclaim my time and say that this tax bill is going to impose a $1.4 trillion deficit on the national debt. It is
time of the gentleman has expired. The chair now recognizes the gentleman from Tennessee, Mr. Kustoff.
Thank you, Mr. Chairman, and thank you, Mr. Secretary, for being here today. I represent an area in West Tennessee and in the Memphis area, and I recently, a couple of weeks ago, convened a banking roundtable of some of my good community banks in the Dyersburg, Tennessee area. And one issue that really drove the conversation was that of CRAs, or the Community Reinvestment Act. And if I can, to put it in perspective, one of the banks that I met with in the district talked about how they were required to open up a branch for CRA purposes. And it's now losing about $100,000 a year. I think that this speaks to the outdated requirements of the CRA when it comes to brick and mortar facilities, those physical banks. The regulators have increasingly included in their CRA examinations criteria that's unrelated to the CRA, including compliance with other financial laws or consumer regulations that have have their own standards and penalties for violations. In my district, one example that I heard is that these banks are being subjected to fair lending questions during their CRA exams. Mr. Secretary, in your role as Secretary at the Treasury, do you envision modernizing the CRA to better suit the needs of the financial institutions and the communities that they serve?
We do. It's something we're actually working on now. It's something that I actually think we're focused on really recommendations as to how it can better serve the community. I think in many places, banks are spending a lot of money and that they're not going to the right places. So we're going to be working with members in the community and banks to try to come up with proposed solutions.
Thank you, Mr. Secretary. You've begun a review of the CRA then?
We have.
And do you know when you expect to release findings from the report?
It is over the next couple of months that we would hope to be able to do that.
Are there aspects of your recommendations that will come out that could be accomplished without rulemaking?
Again, that's something that as we go through, we're going to look at carefully. Some of it we may be able to do through the regulators. Some of it may require changes in legislation. But
thank you, Mr. Secretary. And one aspect that I think that the banks in my district do exceptionally well is financial literacy. However, if the financial literacy, unless it's done in a very specific area, it doesn't count towards the CRA requirements. Is there a way to modernize that?
that is one of the specific things we are looking at and one of the things that I had specific experience in as a banker. I think there's tremendous need for financial literacy in the public school systems.
Thank you, Mr. Secretary. And I'd like to yield the remainder of my time to the chairman.
I thank the gentleman for yielding. Mr. Secretary, one of the things that has always concerned me about the stress test is the possibility of one imposed view of risk and having all of our major financial institutions tested again with the same set of assumptions. And doesn't, in some respects, this undermine market discipline if we're subject to kind of a regulatory groupthink? Do you have any comments on that?
It's something we need to be careful on.
Another question. I've been concerned also about the cost to investors on certain mandatory disclosure requirements that seem to be targeted at, say, social investing and social questions other than what might be considered within the ambit of the traditional materiality concept. And so, do you have an opinion on the, say, the proliferation of these requirements and ultimately what impact they could have on capital formation, economic growth?
I think there should be proper disclosure, but as you said, we need to be careful as to what that proper disclosure is.
Time of the gentleman has expired. I'd like to thank the witness for his testimony today. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witness to the chair, which will be forwarded to the witness for his response. I would ask, Mr. Secretary, that you please respond as promptly as you are able. This hearing stands adjourned.